once you get headed back east again, it's not that difficult to get back here.
Got so about 120 pounds. And my boo went up and across the couch.
But that
And
way,
then
You're supposed to buy all cash I have,
no.
or is she still on the food stamp?
Yeah.
And that was the end of my couch.
Yeah, because for the one case that we're going to buy to get us through to like buy all of the supplies for the store,
I have a faith in other
it's only like $3 or $4.
I mean, given I got it at Goodwill for $190.
Anything else besides water?
But she just is so, and she
Only
being
thing
so
I know of
fat
what
like
we need
that,
is
she's an asshole.
Peanut butter bars?
She can turn on a dime.
Yeah.
Yeah,
But
but
my favorite dogs are still my boss.
Guess we'll go to Walmart then, huh?
I miss my
Anything?
I miss Mr. Dupree.
He would get these skin tags and he'd show them.
Oh.
Okay, and
Mine
one
can
day,
get
I came home one day and there's like, and it's pinpoint streak,
cherry pie.
okay? Blood all over my room.
Intimate
All
cherry
over,
pie?
just like somebody walking around just like silly string.
In a box or
Okay.
just
Yeah.
in the
So
big?
I'm like,
The little mini ones.
Uh-huh.
and I look and there's just this.
The ones that are
streak
square like
shooting
this,
out
but they're
from this
puffy.
thing.
Yeah.
Unlike
Well, then
Coach.
he got
Right,
one,
the intimate ones, the
right
blue
here
and
on his
blue and
face.
white box. They're usually down on
And-
the bottom.
Right.
it got bigger and
Whatever.
bigger and bigger, and it got to the point that it was about that big around, and about that big, and he started doing this now. He started doing like this,
Oh.
and it started getting.
Hey,
Kelly. My client yesterday afternoon, I had the door open, he drove by and honked, and the guy was like, "Did that truck driver just honk?" And I said, "Yeah, that was my husband." He was like, "Really?" And I was like, "Yeah." He does that every time he drives by. So anyway, I took him to the vet, and the vet said, "I think it's just a granular She said, "We'll remove it and get a biopsy and let you know." And I said, "Okay," and then they biopsied another lump in on the side. And she calls me about 5 days later, and she said, "I'm so sorry." And I said, "No." She said, "It's cancer." I said, "Okay." And she said, "We did not get a She said, "In order to get it all, we would have to remove the whole top." And
Is
she
it
said,
that?
"The best thing you can do is just leave it." And I said, "Okay."
So a case of pronounced bottles.
7 and maybe 6. She goes, "I really love you." So, and that was a horrible year. That was 2013. The only reason I remember it was because my mother died in May. Snickers died in April, died in March. And then Uncle.
Do they need to be on separate receipts?
What? No, because we're not going to worry about reimbursement for the $4 of water for right now. When I go out in December, when I go out and I buy 4 or 5 cases of it,
Mm-hmm.
we'll make sure that we get separate receipts to send everything to Brett. So we'll have all of that, like a Sam's or a Costco receipt.
Yeah. When you say you'll probably go to Sam's or Costco for that, you do every year.
Yeah, because we just buy it in bulk.
Not
Now,
everybody.
I have noticed that on those miniature water bottles, we get the Sam's brand or the one from Walmart. They're slightly bigger than the mini bottles, like if you got from Dillon's for like Nestle or such.
Right.
There's a size difference.
Okay. Yeah, normally when I get my office supplies, whatnot, my snacks, I get them from Sam's or Costco.
We have memberships to both. I don't know how many people have memberships to both.
I mean,
so-
last year when I was picking up chips and whatnot, I think it was either Costco or Sam's was running a special. They had a holiday blend that they had up there, like 50 51 ounce bags or whatever for $10.
Yeah.
So I bought like 5 boxes of them. Well, heck yeah.
Why not?
You know.
Yeah, we had a Sam's and Costco a while, but finally figured out, well, A, Costco's
And
less convenient for us,
I was up
and they're always horribly busy
Yes.
since there's the only the one.
Right. Right. I like Costco over Sam's for a lot of their like meat stuff.
Bacon and bacon bits for sure.
Bacon bits, chicken.
Yeah,
Because
he
with-
loves it
with-
prepackaged.
Well, that and it's always I mean, you can get the pre-frozen
13 or
chicken pucks, but
Yeah.
they also have the fresh, boneless, skinless,
So does Sam.
individual packaged chicken.
Okay,
has,
well,
like,
it's,
Chrissy's
their
got
individual
Two to four
package is
pieces
a
Rachel
4-pack,
has English bulldog, one
Yeah, that.
but
one
it's
exotic.
two in each cell.
Leon
Yeah.
Bryant
Oh yeah.
It's
See,
six.
these are
is one of the
at
ones
Costco.
he
You
looks
get
at
like
and it's
4
oh,
chicken thighs per package,
And you get 6
and you get
packages.
4 to 6 packages for the $20.
Yeah, I don't need 4-pack.
Well, I mean,
Well,
we
what we do is we just tear them
buy them
apart.
and throw them in the
Yeah.
freezer,
Well, and that's what I do too.
and now I've got at least 12 chicken meals. You know, you'll cook a whole package up for 4 thighs, but for us that's 2 meals.
Yeah,
So
well, that's what I do too. But right now I'm almost out because, well, we go to Sam's around the 20th,
right.
and today's the 15th. So yeah, it's been almost a month.
So you need chicken.
I need ground turkey more.
I can't eat turkey, or not ground turkey. I can't eat ground turkey.
Well, it's better than ground chicken.
Yeah.
I haven't tried ground chicken. I just do ground beef.
Can't.
Why?
Crystal's autoimmune disease says no, no, no.
Oh,
The only time that I'm allowed to give her a beef product is if I look and see that she's anemic.
need a little iron.
My son-in-law
And
got
then
bit
what?
by a tick and he can't eat anything with horns or hooves.
Anything what?
Horns or hooves. He can only eat like fish and
Mhm.
chicken and he was an out, right,
So ground turkey it is.
bow hunting. We
Yeah.
can't even go
We-
hunting.
After my gastric bypass, I can't keep it down. And I don't know why, because I can go out and buy a turkey and roast it and eat turkey all day long.
Well, just like we had those
Closed.
turkey roasts for the family
Unfortunately, I have a 10 o'clock
gathering, and you ate
appointment
some.
We're closed.
and a 12 o'clock appointment.
Closed. Well,
And I didn't book either one of them.
I plan on being done before
What I
12.
need.
I hope. It depends on Matt.
Well, yeah, so shut the heck up.
What
All right.
iPhone
So
you
with
got?
higher education credits,
Ain't worth crap.
That's what you do. You already told me
So
half
the 12 o'clock appointment is not even from our office.
Oh. Stealing from
someone in pictures.
Ninth and West again.
I'm gonna assume.
I went by there
Your
the other
daughter.
day.
She
and there
wanted
was no
pictures.
bills.
Yes, I
No,
forgot
But that
about
was just
that.
one day.
They're never there.
They're never there. They don't answer their phone, nothing. So they're all coming here.
Website about when you drop off places, so.
Who? Oh, the Ninth and West
And Central
and
Ridge.
Central and Ridge.
That's
Yeah.
what they're hoping.
Well, let's hope.
Yeah. What is their Facebook ad?
All right.
He's
Let's
talking
talk about
plastic
getting
or like-
smart.
Huh?
Talk about getting smart, he said.
I's already smart.
That's already smart.
We're going to talk about higher education credits and expenses.
Call me if you need me.
All right.
Be back.
So we're going to cover some education credits. There's a couple of different. We're going to talk about what is a qualified education expense. We're also going to talk about the education savings accounts and qualified tuition programs.
Coverdale's.
Yeah, well, we kind of already covered it a little bit. We talked about the Trump accounts yesterday because we assumed that some of the rules are going to follow these 529s.
Yeah.
And forgive me, I'm trying to think. There was something that I said last night about last chapter to last night's class that I wanted to try and remember to say to you guys because I didn't say it. I can't remember what it was. It's driving me nuts. I'll think about it sooner or later, I hope.
When you're driving.
Yeah,
you're driving
after
home.
class, I'll
Yeah.
make. Damn it, that's what I was gonna say.
I'll get a phone call. Hey, remember what I was gonna say? Yeah.
Well,
okay.
you already know it, but
Oh, okay.
just trying to remember what it was
I can't even remember what.
because I said it. I said it.
I
I
know
need
you
to
did.
remember, but I can't remember what I was talking about. And now it's just gonna drive me nuts. So
Yeah, thanks a lot.
All right.
What did it pertain to? The Trump account?
No, it pertains to.
Adoption, maybe?
No, it was before that. Either it was the additional child tax credit or it was the other dependent credit. And I just can't remember which one it was.
Huh.
Oh well. Again, we're going to talk about distinguishing between non-refundable and refundable credits. We got a fun one this time. We have one that's part one and part the other, all the same credit.
Yep.
Understand tax savings options for education expenses, practice procedures to claim these education credits, what education credits are available, and how to use them to the best that you possibly can. Define common terms and abbreviations regarding the tax benefits for education. Scholarship, fellowship, what an eligible institution is. Qualified expenses, AQEE, ESA, QTP, MAGI, EIEIO.
Out of my head.
And old McDonald.
It's we work together a lot. And what a qualified student is. We need to understand and apply reporting requirements for education credits and benefits, understand the limitations of the benefits, how to maximize the credits, understand the difference in simulators between education savings accounts, ESAs, qualified tuition programs, QTPs, education savings bonds, how they are reported when combined with education credits claimed, which spend a lot of time talking about it and then don't spend a lot of time talking about it.
Well, we kind of covered that
Last time.
a week ago when we were talking about savings bonds.
Yeah, that too. IRS Publication 970 is kind of what we're working out of today. Of the tax benefits established for education, most apply to higher education. Don't limit yourself thinking about college or universities, though. Higher education can be a VOTEC school. Each benefit has its own qualifications, such as definition of educational expenses allowed or income limits a taxpayer must use to benefit. This must be checked carefully. Of course, in this office, those income limits really don't apply. We're talking about some big money. We don't tend to get that type of money.
Yeah.
Our tax credits based on post-secondary school expenses paid for a student during the year. There are 2 credits available. Now we're going to talk about both of them. We have the American Opportunity Credit, OTC, AOTC, sorry, and the Lifetime Learning Credit. Now we may be able to claim education credits for higher education costs paid on for ourselves, our spouse if we're filing jointly, and or any dependents claim on the tax return that are enrolled at an eligible post-secondary educational institution for the year. Education credits are a tax credit, so they're paying your tax, so hopefully we're getting to pay off all your tax with credits. Credits are based on the qualified education expenses paid for the student during the taxable year for academic periods beginning in the year and the first 3 months of the subsequent year. course, you must have a valid identification number to file for these tax credits by the time that you file this tax return, including extensions. If you didn't have it by the time that the extension date was over, which, by the way, happy extension day, that's today.
All together now.
Woohoo! Tax season ends today.
And the Nashes still haven't come in to sign anything.
I told Clint about finishing that too, and he wouldn't.
And there'll always be someone coming in tomorrow. Is it too late to file? Well, no, it's not too late to file, but you're now subject to late filing penalties.
And I called them and left messages.
I know you
Nobody
did, I got
answered.
on to him.
Nobody's called back, so I'm not going to worry about it at this point.
Neither am I.
An eligible student can be you, your spouse, or a dependent that's claimed on your return. An eligible student must have qualified education expenses and be enrolled at an eligible education institution for at least one academic period, semester, quarter, summer session, whatever, during the tax year. If the student can be claimed as your dependent, either you or your dependent, but not both of you can claim the credit, well, that's consistent. We're not splitting up credits. We're not doubling down on credits. If you claim the student as a dependent, all qualified education expenses of the student are as treated as being heavy paid by you, which can lead to some bad feelings. Because maybe Junior's paying his way through college, but Mom and Dad are the one filing the credit. We'll come back to that. If the student can be claimed as a dependent but is not claimed on another's tax return, then only the student can claim the education credit for their expenses. However, the student must check a box on page 1 of 1040. Someone can claim you as a dependent. What that does is that limits you to how the education credit works. We'll find out that the American Opportunity Credit is 60-40 refundable, non-refundable. Checking this box gets rid of the 60. You're left with only the non-refundable portion of the credit. We will come back to this thought because there's more information that needs to be shared about this.
Oh.
Yeah, this is
I've
the part.
never run into that one.
Yeah, this is the part where you have the 22-year-old wanting to claim himself
Because he wants that money.
because everybody else around him is filing a tax return, but we know by rule anybody under 24 is a qualifying child of their mom and dad.
They get that credit.
If they're living at home.
No.
No, temporary
No.
absences.
It can
If
be
their home
temporary
address is
absence.
mom and dad's.
Well, okay, but and this is my theory on that. Okay,
Here we go.
This is my
Yeah,
theory.
I'm listening.
This is my theory on that. So at 18, child moves out, maybe for a couple of years while he's away at school. He's having everything sent back to mom and dad. So mom and dad are claiming him as a dependent. But his senior year, he decides he's going to get his own place, his own apartment. He's got an internship somewhere in line with the degree that he's doing at school. So he's got his own place. Everything's going to his residence. He's no longer a dependent of his parents, even though he's still young enough that they could claim him if all of the parameters applied, because he has his own place.
I think you're going to need just a tiny bit more than that to really
Yeah,
satisfy
I do
the
too.
IRS.
I do too. Because you can live off campus and still be away from home.
The only thing that, I'll take the beginning of your argument. I'll accept that, but I need one more parameter to really think that the IRS will buy it.
As long as he has his current address in wherever he's living at by the campus,
I'm not worried
if
about
that's where his 1098T is going to, I'm going to be fine and dandy with it. Because now- because now that's not going to mom and dad, that's going to his residence.
And I think the IRS still might have a problem with that. The other caveat I want is I want to make sure that he's paying over half his own support.
Yeah, I mean,
Because I got a kid that is going to school in Princeton right now.
right,
Mom and dad are still claiming him, and he is working.
right. But that
And he had $12,000 worth of income because I did his tax return.
right, and that's my point. If he's got $12,000 or $14,000 worth of income, and he's going to school full time, and he's got a 3-bedroom house that he's renting out with 2 buddies, so his rent is a third of $1,000 a month. He's paying $300 a month rent, $100 a month for utilities, and he's buying his own food because he's making $12,000 to $14,000. Technically, because he's under 24, he could still be claimed as a dependent. But if he's living off
Who's
campus,
paying school though? That would be my question. Who's paying for school? Because school is so, especially Princeton, it's so expensive. That's going to trump over him.
but there
Period.
again, it doesn't matter.
Period.
At that point again, it doesn't matter who's paying for the school. If the 1098-T is coming to him
It's always going to go to
in
him.
his name at his address at the school,
Which they don't mail him anymore. So
I
that's
don't.
not going to happen.
Right, but when he prints it off, if the address listed on the 1098-T is the address that he has at school, he's got plenty of income. He's got plenty of income.
Just not.
It goes back to, it doesn't matter who pays the bill. The money was paid
To the school.
to the school. It doesn't matter who paid it. It's just like if I paid your property tax. It doesn't matter that I paid your property tax. I don't get to claim your property tax on my tax return just because I paid it.
Okay, but see, that's
The big catch is going to be this.
You're
Mom
always
and
gonna
dad
have-
can't list that child on their return that year as a dependent.
I don't know. I'm not.
I'm not sure. I'm going to say that you might get it, you might not. It depends on your agent that you're going to be dealing with.
You know,
Because that's going to fall along those lines that, again, the agent that you're dependent running back to, well, you live next door, so we're going to throw out married filing separate. We're going to throw out considered unmarried because you live too close to your wife.
right?
Well, same thing. You know, they might throw it out as, okay, yeah, you're showing that you kind of live someplace else, but technically, you're still just displaced because of you're a student, and so they're going to look at, I need a little bit more, and if I can prove he provided his majority support, then I'm more willing to listen to it. I think you need another piece. I think just having that other address just isn't enough.
Yeah.
We need to show that he had provided
Well,
majority support.
but if you read your statement, if the student can be claimed as a dependent, but is not claimed on another person's tax return, then only the student can claim the education credit for their
Right,
expenses.
but we're not talking about it that way. We're talking about whether or not the child can be claimed. You're right. If the kid is not claimed on the return, then yes, they get the 1098-T. But if mom and dad are still providing more support, and regardless of whether, I'm sorry, that 1098-T is listed to their address or not, if they're still supporting that kid, and that kid comes home, when he comes home, he's coming to their house, not somewhere else. I'm sorry, mom and dad can still claim. That's
It's just an interpretation of rules. Being a little bit more conservative on our interpretation than liberal you.
Does the program,
No, but
no.
I would suggest that in this particular case, maybe you run it past corporates, wonks, and see what they say about
Yeah,
it.
that's right.
Basically, all this is saying is
because we
that,
only have like 2 clients that do,
well, basically what we're getting at with this, and what this is saying is that any client that comes in that is
I mean, I
between
get-
the
I get what
ages,
you're talking about.
any client that comes in that is between the ages of
18 and
18
24.
and 24, when they file a tax return, we are required to mark they can be claimed as a dependent. Unless they can come in and prove mom, dad, grandma, grandpa, aunts, and uncles are all dead and could not claim them.
Yeah, there's some exceptions coming up.
And that's what I'm not agreeing with, is because by this statement, a 19-year-old who comes in, works 40 to 60 hours a week, is going to Wichita State at night,
Then they're not.
has to put down on his return that he can be claimed as a dependent.
No,
No.
I disagree with that one.
You could go to night school and still be full time. Wichita State has enough ways
Well,
to do
yeah,
it.
okay.
Right, but that's what I'm saying. You can go to school full time. You could have a 40 to 60 hour a week job that you're working, and if you're 20 years old, when you come in to file your tax return because you've made $35,000 at your job and you're going to school full time because you're 20 years old, you still have to put down you can be claimed as a dependent on a return if you're between the ages of 18 and 24. And I don't agree with that.
Well, and like I said, if you can prove that you're supporting yourself, then that takes the qualifying child aspect out of the equation.
Right.
You're not checking the box. All right? Because you're not. You can't be.
That box is the box.
What this box is stopping, and we all know these people, is they come in here, they plop down a 1098T, no income, and wanted to walk out of here with a $2,000 refundable credit.
I think we had
That's
one
what
that
this
wanted
is
that.
stopping.
One mom was trying to do
Right.
That's what this whole thing is trying to do. They come in here, no income whatsoever, plop down a 1098T. The rules of the American Opportunity Credit are saying that you're going to get 40% of what you spent up to $2,000, and of course they're full time. They meet that. They're walking out of here with a $2,000 refund on no income. That's what this box is stopping. How did you support yourself? Mom and dad did it. Well, I'm sorry. You can be claimed by mom and dad. You don't qualify. By checking that box, you don't walk out of here with the $2,000 because it's not yours. It shouldn't be.
Right.
That's all this is saying. An education credit, verify the following are true. You cannot be claimed as a dependent on somebody else's tax return. Going back to the rules of the qualifying child. Being related. Where you lived, or what, at least your home address is listed at what relative to your temporary address because you're at Princeton in New Jersey. Whether or not, basically, you provided majority support. Who's supporting you? Who's buying the Cocoa Puffs? Who's paying for that cell phone that you're running around with? Education credits, you cannot be married filing separately for any of them. Your adjusted gross income must be below the limitations. You or your spouse in filing jointly were not a non-resident alien for any part of the year, or if you were, you elected to be treated as a resident alien, meaning that they're taxing all your income.
Can tax documents be sent to a P.O. box?
As far as I know,
Mm-hmm.
the IRS doesn't like it.
The only hiccup you get with a PO box mailing address is if a client comes in and says my mailing address is a PO box, and then they want to turn around and do a financial product.
No, you can't do that.
You can't do that. You have to have a street address.
P.O. box is considered what, portable, kind of, 'cause
Well, it doesn't prove any residency whatsoever. I can get a PO box
somewhere else.
anywhere.
Yeah, I can go to Minneapolis and get a PO box
Right.
and have mail sent to that PO box, and never live a day in Minnesota. It doesn't. It's
I
not.
didn't know if that would cancel out any of the credits and things if you didn't have that.
If you were just filing everything paper file and whatnot, and you put down a PO box as your mailing address, and you paper filed everything and mailed it into the IRS, they're not going to be happy with it, but they're going to process it, and everything's going to come out fine.
Yeah.
Because to me, a P.O. box is kind of like PayPal. When you pay for something, you're going through them, but you're actually over here, and you're just buffering and.
Well, that's why they don't like it, and
Right.
part of the reasons where it might come and bite you back in the ass is when you got to try and prove that you're you to the IRS because you need a back year's tax return or something like that, and you need to go through them, and they're going to ask you what was the last residence listed on your tax return. They're not going to be so keen
About a PO box.
about a PO box. They might go back to a year where you actually had a street address, and
Yeah.
you got to remember that one.
Yeah, if you had a PO box for 6 years, and the last time that you had an actual street address on your tax return was 7 years ago, and you're trying to get an IP pin,
Yeah.
you're trying to get your ID.me account, and they're like, well, what was the last address that you had? And you put in a PO box, and they're like, yeah, no.
Yeah, they might not take that. That might cause problems.
I
They-
just
they're
didn't know if they had an impact on that.
not really, but it's also not going to be enough to, if you're relying on that to establish a residency, it's not going to be enough because, like Matt said, you just have to be in that one place that one day to open the P.O. box and never go back again. Does that prove that you live there?
I mean, if you think about it, do you have to have a valid photo ID to file your tax return?
Yes.
Yeah.
No.
Not
No,
really.
I thought you had
No,
to
because we
you
don't,
don't.
necessarily have
Only
to
for
use ID.
financial products.
For
you do,
financial
but
products
not
you do,
for tax.
but that's because you're now dealing with federal banking laws.
Yeah.
Just to file the tax, if I came in with $500 to do my tax return and you said, okay, do you have photo ID? I say, nope. Well, your return's $350. Here's $350 cash. You don't have to put down that I mean, we've got boxes in the program that
Right.
says did not provide a photo ID.
Right,
Right.
right.
I don't have to give you a photo ID to file a tax return.
But also,
do,
I could use that as an excuse if I'm feeling uncomfortable about the tax return and say, hey, I'm not filing this because I don't,
I can't, well, it'd be like the police department. If I can't ID, you go with me.
Yeah, but Matt's right.
Yeah.
It's not a requirement. We kind of require it on a personal level, but and also we need it if you're doing a financial product.
right. If you want to do the EA, or you want to do the holiday advance, or you want to do a refund transfer, those are all products provided through a federally insured bank, and their law, their regulations state you have to have a valid photo ID. You know,
Well,
that's
I would prefer to have the ID.
I do too, and I ask every single client. I don't ask, are you paying cash, or are you? I always ask, do you have your IDs with you? And we always get copies. But technically, if somebody pushed it and said, I'm not comfortable giving you guys my ID,
I think we only have one lady like that.
then my next question is all right, are you wanting to pay for this up front, or are you wanting to have our fees taken out of your refund? If they say, I want my fees taken out of your
Then we have to
refund,
ID.
then I come back and say, by federal banking laws, I have to have a valid photo ID on file for you to be able to do that, because we have to go through a third-party bank. If she says, oh, no, I'll pay cash up front, then it's a dead issue and I don't worry about it.
Yeah, there's no requirement. Unless you're feeling extremely uncomfortable about the whole situation.
So far, we haven't had anybody come in that.
Typically, if
Super
somebody
good.
were to do that, I would start looking over every single 1099 and W-2 document that they handed me.
Right.
But don't you have to have an ID for people who come to?
Well, because that's
It's a
banking
banking product.
Yeah.
Right, okay.
It's a bank product. But if they're paying up front, I can
Yeah,
set it
but
up. I
now
can.
that the IRS is no longer doing,
This
and
year
we
will
have
be
to-
different,
right.
but up until this year, if they were paying up front, I could have a
Right,
check
right.
mailed to the house.
right,
Yeah.
Can't do that anymore.
No. They're going to
Do they
have to have a
take
bank
check out
account.
period?
Huh?
Did they take the checks out period, or?
Yeah,
the
IRS.
IRS is
the
no longer.
IRS
I don't see how they can completely eliminate it. What I believe that they're going to do is they're going to take it out as an option because, and this is the reason why I can't believe they can't get rid of it completely. It'll never be an option, but the check will be available, say, like if, and this happens, you put down banking information and it's wrong and it gets bounced back, the IRS
Automatically cuts it.
doesn't have a problem. I mean, up until now, they just cut a check and mailed it to you. I don't see how they get around that one. They have nowhere to send the refund to because if the bank rejected, say no, that's wrong.
It's not a correct account.
So what other options does the IRS have at that point?
Yeah, I don't know.
Well, I'm wondering if they're not going to do what Social Security did when they first said no more paper checks, and they started issuing everybody debit cards, remember?
Oh, yeah.
Because, yeah.
Well, that might be a possibility too. Is that okay? We're not going to send you a paper check. We'll send you this debit
You
card.
had the option to either have it put on the card they issue you, or you set up a bank account,
Direct deposit.
direct deposit. And those people that got those cards, their social security goes on it
Yep,
Every month.
every month.
Ron's done.
You see, like
I'm thinking-
like Shannon's got a problem because I know she has one client who does not qualify for a Deep Blue card. They won't give him one.
Rocktown, right?
Blackball.
Yeah.
I can't remember the name.
Well, we have a
But that's not the
client
point.
couple that's on the verge of being blackballed from every card.
So he better come in with a bank account because I can't sign him up for a Deep Blue card because Deep Blue won't give it to him.
Usually he does a printed check in the office.
Well, and that's another option. But again, if you've chosen to go the direct deposit route and it gets bounced back, that's not an option.
Well, yeah, it is.
No,
If
no,
you
the
did-
IRS wouldn't know because it'd have to go to Republic and they don't have the information.
Okay. All right, but assume, I mean, in your scenario where you're going to have a check printed in the office,
No,
the only reason that you're going to have, for that client, the only reason you'd be having a check, you have the option for a check printed in the office is if he's doing an RT.
right.
So if he's doing an RT and he decides not to have the check printed in the office and he gives you direct deposit information,
Yeah.
and the bank bounces it back, Republic's going to send you a
Republic can
check
send
anyway.
A check. Yeah,
Because
Republic
that's
will
their
send-
backup.
Yeah, but that's Republic's problem as far as the IRS is
That's
concerned.
not IRS.
They
Right.
sent it to Republic; it became Republic's problem.
Right.
All right. To claim the American Opportunity Credit, which is the stronger credit of the two, or the Lifetime Learning Credit, which is the weaker credit of the two, but it has its advantages. Your dependent, student, or you generally must have received a 1098-T tuition statement from eligible college or vocational school, whether it's in the United States or abroad. And yes, I have seen in one instance where a Canadian college issued a U.S. 1098-T to a U.S. student because they knew that they would need this. Here it is.
What if one of your kiddos is
The
under
University
the
of Montreal,
age
if you really want to know.
of 18 and in, like, say, senior in high school, but doing college courses?
That's what we
I'll
were
get
talking
back to
about.
that in a little bit.
Yeah. I hit on that the other day.
Yeah,
However, the school is not required to issue a 1098-T for certain non-degree programs, non-resident alien students, very short courses. You may still qualify for the credit. In such cases, you must document the qualified tuition-related expenses. Refer to 970 for details on situations where a 1098-T is not required. Basically, what they're saying is that in the case that you don't get one, just basically because it's not issued for whatever reason, if you have enough receipts, you can claim the credit. The problem is, and it's a minor problem, but it's still, okay, it's a major problem actually, but it's a problem still. You have to have the EIN of the school to really make this work. Otherwise, I don't know if I can make it go paper. I might be able to override it enough to make a paper return out of it, but I can't electronically file it without that EIN.
I mean, my only workaround is if the school refused or didn't issue 1098-Ts.
Which is a rare case.
Which is very rare, but if they did, they would need to be able to provide some invoice of what the student paid for. They'd be required to.
Yeah.
So as long as the student could go back and get a printout from the school of what was charged to the student and what the student paid.
Oh, remember though, in the difference in the two credits, not only I don't have to buy everything from the school.
Right. But I mean, as long as I had that printout that showed that he was paying for courses,
Right.
I don't care if he didn't buy a single thing at the
Yeah.
school at the school store.
Right.
As long as it showed he was paying for courses, then if he brought me in that showing paid courses and he brings me in a handful of Amazon receipts for books and education related stuff, I think you could probably make that go, and hopefully the EIN of the school would be on
Hopefully, you can
the
find it someplace.
invoice.
There was one year where I had to actually no, and the two occasions where I really went out of my way to try and get it. One, I actually called the registrar because it was at Coffeyville, and they actually told me.
Yeah.
And the other one was is that I recognized that I had used the 1098T from that school on a previous return, so I went and got it off. Went and got it off of her previous return.
Now, do they not issue them because of the amounts?
No,
Just aren't
no.
high
Basically,
enough,
what
or
they're
they-
saying is that I'm not issuing a 1098T, and we're really what we're talking about here is probably somebody that's not going to qualify for the American Opportunity Credit anyway. But we're not issuing a 1098T because, like we said, it's not a degree related class. You know, it's just you took wine tasting.
Okay.
You know,
So
well,
it's not
technically you're
educational.
well, but it is, but it's not.
Right.
So it's not American Opportunity; it's still lifetime. And remember, we're still talking about either credit at this point. We haven't gone down to the different paths yet of the different credits.
Right.
So that's a
So it's just
possibility.
supporting document for both, right?
Yeah. Another one is that we're talking about here is we've got a student that may or may not have a valid Social Security number, at least for employment purposes. Then they're not. Then they might not issue a 1098T because
They're not
you really don't
required to
qualify
pay
for
taxes.
anything.
They may not qualify to pay taxes in the United States.
Right.
And they wouldn't need a tax document.
Yeah, they don't need a tax document.
Would graduate level courses,
Graduate level courses count.
yeah, but would they be issued a 1098T?
They should.
Okay. Just the box that on the bottom that says graduate would be
Checked.
checked. Okay.
And then automatically we know what's going to happen next.
I hand it back to them and say, thank you very much, but this is not needed.
Oh, well, it might be needed. It depends.
Well, lifetime learning.
Lifetime
I
learning.
was gonna say you can do it
Yeah,
But
lifetime learning.
let's not go down
Jumping
that.
ahead.
Let's
Yeah.
not go down that path yet. And most educational institutions are not mailing these anymore.
No.
They're available on the student's portal, which is great if the student's still enrolled. Not so hot if they're not.
Oh, yeah.
Will
Student
they
graduates May of
reject
this
them?
year and then comes in next year in March to do their return.
They can't log into their student portal because they're not a student anymore.
Right, if they didn't sign up for graduate classes.
So it might be a little hard. You need to have them call the registrar's office to get a copy of it, or something. They might email it to them.
Might email it to them. If they're local, they might request they come down.
Yeah,
If you don't have one of these, will it reject your tax return?
if you don't have an EIN, it might not allow you to electronically file. You might have to go paper.
Yeah.
The educational institutions are supposed to make their 1098Ts available to each student by the 31st of January, which is consistent for almost all forms. They must be in receipt of the tax person by the 31st. There's an exception, of course, on the K1s. But we're not talking about K1s today. You may thank God for it. This is what 1098T looks like, and it's got lots of information that we need. We have the name of the student that's enrolled. We have the educational institution where they're enrolled at, and the EIN of said institution. Thank you. We have how much they paid. We also have how much they might not have actually paid out of pocket because they've got scholarships. And if 5 is bigger than 1, guess what? They don't get any credit if they
Maybe.
don't have any out-of-pocket expenses.
Maybe.
Maybe. Yes, we'll go back to that.
There's one
Down
more
here-
step.
Yeah. Down here, there's some other things. Check if at least a half-time student, because we're going to find out on one of these credits. That's an important box. Check if a graduate student, again, for one of her credits. That's actually an important box.
That's really it.
Yeah.
The only other one that is kind of important is, what is it, box 7, where part of their fees were paid for the previous year.
For a spring semester.
Yeah.
I'm paying in December. I paid expenses for my spring semester next year. If that box is checked, those are actually eligible as expenses. You're just telling the IRS why your credit might be big.
Yeah.
Why did you pay so much to university? That's a lot of money.
Yeah.
Because in effect, you might have paid for 3 semesters. 4 if you went to summer school.
Right.
Lucy claims her daughter Miranda. Miranda is dependent on her tax return. Miranda pays qualified education expenses out of her earnings from a job as an assistant manager. Lucy could treat these expenses if she had paid them and use those expenses to take an education credit on her tax return.
Mm-hmm.
This is what Matt was kind of talking about, trying to avoid. And there's a point, and the argument can be made if you get the right rules. But we also come up with a lot of people that don't have any income whatsoever.
Right. Now, and I'm completely fine with that scenario, but with my scenario where if Lucy wasn't living at home, because I'm assuming that she's living at home because all of her earnings from her assistant manager job are going to pay for school. So Lucy might be paying for her own schooling, but who's supporting Lucy so she can go to school? That's a different story. If Lucy is on her own, paying for her own schooling and supporting herself, and wants to file her own tax return, she needs to let mom know, I'm filing my own this year, do not claim me, and then she should be eligible for everything.
Yeah, but
she won't get earned income credit. She's too young.
But you changed the nature of your argument. You all of a sudden now threw in support. You've changed your original argument now to provide the support.
That was in my original argument.
No, your original argument was based on address alone. You never said anything about support.
Okay, well,
I added it.
Right. Okay.
All right. Which is not fair. I mean, I can see where Miranda has a beef. And Lucy should do something, hey, I know I'm going to get $2,000 refundable credit. Let's talk about something you need and we'll go get it. Or, I'll give you some money.
Did they increase the AOTC?
60-40 with a $2,000 limit, so no. No, I didn't find anything.
It's 60-40 of $4,000. The refundable portion is $1,500. $2,500 non-refundable.
I don't have any information as far as changes on that.
Okay, but you keep saying $2,000 refundable, and it's only $1,500. It's 40% of $4,000.
All right.
That's why I was wondering if they increased the amount.
No, not that I know.
Or increased the percentages.
Qualified education expenses are tuition and certain related expenses required for enrollment at the attendance or eligible educational institution. Key word, required. Related expenses include amounts spent on books, supplies, and equipment needed for a course of study. Student activity fees are included only if the fees must be paid to the institution as a condition of enrollment or attendance. So, for example, when I went to Wichita State, if I wanted to use the Heskett Center, I had to pay a special fee to have privileges to use the Heskett Center to go work out. That wasn't required. I couldn't write that off.
Now, if you have to buy that because you're taking a class in that,
As Shannon is jumping my gun, like Matt does, if I take golf, which I did,
Was exactly where I was fixing to go.
if I take golf, which I did one semester, and part of the requirement of the golf course was that I have membership at the Heskett Center, now it became expensible because to take golf, I had to have the fee paid to Heskett Center.
So if going to school, working my degree, I had to have 2 credits of an elective, and I decided to take golf as my elective.
Which is what I did.
And I had to buy golf clubs and cleats, and all of that stuff would now become eligible education expenses
That is correct. I would need those.
to fulfill your degree requirements for your elective.
Right.
That's where I was fixing to go.
Yeah.
Mine was the class I had to take. The class was in the Heskett Center itself.
Right.
Uh-huh.
So to gain access,
You had to have it.
you had to have it. And what the class was? Yoga.
Just as ridiculous.
Still counted.
Yeah, golf. I went to like 3 classes and said screw it. And then every time that I was supposed to be at golf class, I just went and played golf. Which was fine. It was a requirement for the class. You had to turn in your cards. So he didn't care whether I was there or not. And frankly, he wasn't helping me. That's the reason why I stopped going. I'm left-handed.
I'm both.
I'm a left-handed golfer. He can't help me.
A right-handed pro is not the best instructor for a left-handed golfer.
Damn, that's something else that you got in college. Jesus.
For course-related books, supplies, and equipment, the American Opportunity Credit, the materials can be purchased anywhere.
Mhm.
I'm an artist. I'm majoring in art. I'm taking an oil painting class. I can go down to Everly's, Michael's, Hobby Lobby, and buy my stuff. Buy my easels, buy my paint, buy my canvases. As long as I'm going to the American Opportunity Credit. Lifetime Learning Credit, again, I can take the expenses for these items that I need for my class, but now I have to buy it through the institution.
So you can't use an estate sale
I could use an estate sale,
as long
yes.
as they receive.
As long as I have a receipt, which generally you don't get at an estate sale.
Right. But that has to be for the American Opportunities
Right.
Credit.
Oh,
Yeah,
If you're doing the lifetime learning credit, everything has to go through the institutional bookstore.
which is fine. The reason why I used the mention that I did, because at least once a year I usually find myself walking the campus of Wichita State just for funsies, and I show up at the bookstore and there's a big huge section with easels and canvases and paints. I can buy them there.
Yep.
If I was an art major. I don't have to go to Hobby Lobby. I could buy them on campus if I wanted to. You can buy them from Amazon. You can buy them from any online retailer that you care, as long as you can get a legitimate receipt for the American Opportunity Credit. Again, Lifetime Learning Credit has to be through some form of the university, whether it's university bookstore or some other part of the university.
If you buy, if when you go into your class, if your instructor has a package that you can purchase through the class,
Mhm.
that qualifies.
Yes.
was it because it was listed on the paper?
Well, from with letterhead.
Well, when I went to Vatterott for my computer diplomas, the A plus toolkit and everything else, we purchased. It didn't have a bookstore, but we purchased it through the school for that specific class.
Somebody
That's
they
that
recommended.
that is a qualified education expense. If WSU's bookstore didn't have paint and easels and brushes and everything else, but when he went to his art class, if the instructor in there said, here's a package of everything you're going to need for this class, and you purchased that through the class, through the instructor, that's a qualified education expense through the institution. The
Because
only way you couldn't do it is to go on eBay or
Right.
Amazon and buy it and then try to submit that, because that's not through the institution.
The other thing that we have to be careful about is just because you bought it from university bookstore doesn't mean that you needed it for your class. We have to be able to make that connection.
Yeah.
You bought a whole bunch of art supplies, but you didn't take any art classes. Well, I don't think so.
That doesn't count.
You bought a jersey, you bought cups, you bought
Yeah, none of that's going to count.
swag.
Yeah.
There's no requirement that you must wear a Wichita State shirt to go to class.
Right.
Well, if
Yeah.
there was, then I can write it off. But
Yeah.
since there's not,
You buy a football jersey, but you're not on the football team.
They
What
only
football
have a
team?
football team.
what football team?
I'm just saying. Most universities have one.
Well, thank God mine does not. I just wish they had a hockey team.
Okay, you buy a hockey jersey,
Bite
but you're
me.
not on the hockey team.
I can't stand up on the skates.
You buy a baseball jersey, but you're not on the baseball team.
And let's not, I might come back to this, or it might be, but let's not limit ourselves to just direct things. Try and go to school nowadays without a computer.
Yeah.
It's not possible.
Most schools require you to have a computer.
So,
Butler did.
if I need to buy a computer, because basically it's going to be a condition for me going there, otherwise I can't submit my work.
Right.
I can't turn in my work. I can't get my email. I can't do anything. If I buy a computer, I can write off at least a portion of it as an education-related expense. Printer, mouse, keyboard,
Paper, ink.
paper, toner. Let's not overlook these things. They're available for us to use.
Microsoft 360.
Yeah, if you buy a subscription to Microsoft Office, or you decide to go old school and you get, I don't know if they still make it or not, but you decide to buy WordPerfect and Lotus 123.
Yeah. Bitdefender, any antivirus software, all of that stuff. Yeah, NordVPN.
I'm not so sure that they might be keen on letting you do a VPN, but
Well, NordVPN's antivirus software.
well, okay, yeah, that part of it, but I'm not sure about them accepting a VPN.
Well, most of your
Unless I'm a computer science major.
well, most of your internet browsing security programs, software like that includes VPN protocols.
Yeah, and I'm not worried about it. See, I prefer Surfshark, and it doesn't,
Yeah. I got Bitdefender, and I have the ability to create a VPN, but
I have Surfshark, and it basically is the VPN. It doesn't really have much else to go with it. The reason why I prefer it is because it doesn't care how many screens I have.
no, I don't know if Bitdefender does.
Most of them do. Active screens at one time.
Yeah, I don't
Surfshark
know.
doesn't care. At least up to now.
Yeah, I don't know about that.
Non-qualified expenses include payments for room, board fees for personal expenses, health fees, medical expenses, insurance, transportation, other costs for personal living or family expenses are non-qualified expenses. That's the cost of life. You're going to pay those expenses whether you're going to university or not. You don't get to write them off. This is true even if the amount must be paid to the institution as a condition of enrollment or attendance. And this is, think about this. Especially on sporting programs, if you're a freshman, you're required to live on campus.
Yep.
Doesn't mean I can write it off, because still at the end of the day, I was going to have to pay to sleep someplace, so I'm not going to be allowed to write it off. I was going to eat a meal, I'm not allowed to write it off. Even though I was required to buy the meal from the cafeteria in the dorm, and I was required to sleep at the dorm, I don't get to write it off.
No. A lot of your athletic students that are there for athletics, are required to have a dorm and cafeteria package. Because the athletics directors want all of their athletes at the school
So they can keep track of it.
100% of the time.
But especially the freshies.
Yeah, especially freshmen.
For expenses related to sports, games, hobbies, or non-credit courses, American Opportunity Credit, they qualify only if they're a part of the student's post-secondary degree program. I was able to take my golf class and write it off because I needed the elective to
Right.
graduate. If I was taking golf just for funsies, I couldn't use it on the American Opportunity Credit. Lifetime learning credit. The expenses qualify if they're taken only to acquire or improve job skills. Well, if that was, say for instance, I was only taking golf because that was my course, and I was taking it kind of for fun, but the real reason why is I kind of need to improve my golf game because, you know, that's where we do our business. We go out to the golf course and negotiate a contract or something. I need to be better at it because taking 110 strokes per 18 a little tiring and takes a hell of a long time.
Damn tree.
Makes your client feel good, but
Yeah, you beat me by 70 strokes, man. Congratulations.
let me pick up lunch. You were going to do it anyway, but
But I can make the argument that I'm taking golf to improve my business skills. Therefore, I'd be able to write it off.
taking golf to be able to improve my business relationships.
Yes, thank you. Not my skills, but my relationship. Which would improve my job skills.
Yep.
Because I've improved my relationship aspect, which therefore improved my ability to negotiate because I'm on the fairway, not way over there in the rough. While
Right.
he's on the fairway and we can't talk. Hey! Thor!
Yeah.
Qualified education expenses paid by a dependent whom you claim or by a third party that for that dependent are considered to be paid by you. Which was the example we had earlier with Lucy and Miranda. Miranda was paying her own expenses. Lucy's the one writing it off. To be fair, I think that Lucy should make some concession to Miranda when she files her taxes. And most of the time, when I have college students and their parents filing a tax return, that's what happens. They realize that, well, I'm getting this refund partly due to you, so I'll give you a portion. I'll give you a taste.
Matt, so with the lady that has the daughter that's still in school, what's her issue? I don't remember what her problem was, that she kept calling and kept calling.
Oh, okay. So
Was it because they did not issue the 1098P or because they did?
no, they issued the 1098P, but her confusion was the fact that her daughter was still in high school. She was a junior in high school still, but she was taking college courses at WSU for nursing. Now, my son's ex-girlfriend, her daughter was doing the same thing, and when we were doing her return, when she would come in, because she was also working at Wesley, so she was earning a paycheck, so we were filing a dependent return for the daughter as well. But what we were doing was, because the daughter was under the age of 18, still in high school, but she was getting a 1098T, instead of filing her under the American Opportunities Tax Credit, because the amount of her expenses up there were only $300 or $400. I don't want to burn a $4,000 credit on $400.
So what right now, Matt, is taking care of about 5 or 6 slides that we're going to get to.
Right. But so what we did was we filed that under the lifetime learning credit. Yeah, she only got $40 for it, but it preserved the daughter's ability that when she actually graduated high school and went to university, she could claim the American Opportunities Tax Credit for a bigger credit. And the one that kept calling, she was trying to figure out, because they were telling her because her child was in school, she didn't qualify for it. Because she was still in high school, she didn't qualify for any education credits. And that's not true. Even in high school, if she would have wanted to take the American Opportunities Tax Credit, she could have. Should she have? I say no, because it's only $400.
Right.
If it had been $4,000,
Maybe.
even with her in high school, that's a completely different scenario. It might be worth it.
Mom always made it sound like it was big bucks coming back to her. She had
Yeah.
to have it on.
Yeah, and I kept telling her, look, it's your best case scenario is $4,000, and of that, only $1,500 is refundable. The rest is basically a tax credit. So if you don't have any income, if you don't have any taxable income,
There's no point.
there's no point in taking the American Opportunities Tax Credit. You're going to lose 60% of whatever your credit is. There's no point in it.
You cannot deduct higher education expenses and also claim the American Opportunity Credit for the same expenses.
That was another case of
So-
one of those. Some guys told her she could get
if
$4
I'm
grand.
if
Oh,
I'm
yeah.
self-employed and I'm going to school, I could actually write them off as an expense related to my business. But by doing that, then I can't double dip and write it off as a tax credit also. That's double dipping. And going back to this one here real quick, third party, I don't care where the money came from. It can be for scholarships, although that reduces the amount that I'm available to take the tax credit. It could be from grandma. Grandma could be paying for it. I don't care. Doesn't matter. Cannot use the same expenses to claim both the American Opportunity Credit and the Lifetime Learning Credit for the same student. Now, I can have both of these on my tax return. I can have American Opportunity Credit and Lifetime Learning Credit on my tax return, but they better be for two different students.
Yes.
Cannot use the same expenses to figure the tax-free portion of a distribution of an ESA or a QTP, so Education Savings Account or a qualified tuition program, paid to claim the American Opportunity Credit. Why? Because the ESA and the QTPs are tax-favored accounts to begin with. If you take your money out of them to pay education expenses, I don't pay any tax on that money. Therefore, I've already received my tax benefit by getting money that I didn't pay tax on. So I'm not eligible to use that money to claim the American Opportunity Credit. Cannot claim credit for expenses paid with tax-free educational assistance such as scholarships, grants, or employer-provided aid. Again, I'm getting a benefit that I'm not paying taxes on. That's my tax benefit. I don't get to turn around and use it again and get another one.
You brought up an interesting scenario.
Of course I did.
So, if I qualify, where I could take education, what I spent on my education as a business deduction. Should I take it as a business deduction or should I take the AOTC? If I get a 1098-T and I could claim those expenses as a business deduction, if I had $10,000 in qualified education expenses and I claimed the AOTC, which eats up $4,000 of my 10, could I then turn around and take $6,000 as a business deduction?
I would want to do a little bit more research on that because most of me says, yeah, because I maximized.
I'm not double dipping. I'm
I'm
just
not double dipping. I'm just using what was left over.
the unused portion.
Yeah, but there's the cautious side of me that says proximity, which has nothing to do with what we're talking about. It's just the idea.
Right. No. Yeah. But
But
that's yeah. That's what I'm wondering. Is
I'm leaning toward yes because I had enough money to do it and
to do both without
without crossing
a boundary.
a boundary. An eligible educational institution is accredited college, university, or vocational school eligible to participate in student aid programs administered by the U.S. Department of Education. And since Dump is trying to get rid of the U.S. Department of Education, I don't know how that would read in the future.
The federal student aid program is not going to be under the Department of Education anymore. It's going to be under the Treasury. It's going to the federal
Or
student
Treasury.
aid the federal student aid program is going to be a department in the Treasury Department, as
Or
I
Treasury.
understand it, because that was one of the big things when he said he was going to dump the U.S. Department of Education. They wanted to know, what are you going to do with FAFSA? And his immediate response was, FAFSA, being a financial arm of the federal government, will be handled through the Treasury Department.
So is his Trump account. So, man, move to the Treasury Department.
That's what I'm
Because
thinking.
Elon's working out of that one.
The
Elon's
school should
not
be
working
eligible
there
to tell if they're an eligible educational institution. Well, I mean, it's not hard. I'm sure I could actually go online someplace and find out whether or not they're eligible to take student aid. I'm sure the government has a website somewhere that says whether or not that school takes federal aid.
Mm-hmm.
Doesn't mean I have to take federal aid. All it means is that the school can get There are certain educational institutions located outside of the United States that also participate in this program. For instance, most of our Canadian friends
University of Montreal.
participate. It's the reason why you got the 1098T.
Right.
Refund of qualified education expenses may reduce adjusted qualified education expenses for the year or require repayment, recapture of a credit claimed in the earlier year. So this is really bad in the case of, I took off on this year's taxes money I paid for a class I'm going to take in the spring, so I got a tax credit for it, and then I decided that, well, this is too damn hard, I'm overloaded, I'm going to drop this class. And I got a refund for it. Well, now I got too much credit, didn't I?
Mm-hmm. Now we got to recapture it next
Now I got to
year.
recapture it on a future return. Or I can file an amended return. I can take my pick on that one. Do I want to wait till next year and play some magic, or do I just want to take a 1040X and take care of it right now? The option is yours. And by the way, the 1098T might list that. There actually is a box for it. Amounts refunded for a class that might have been on a previous 1098.
Yeah.
Let's see here. If the refund is received before, That's it. Talks about what it talks about. As noted above, qualified expenses must be reduced by any tax-free scholarships and grants used to pay those qualified expenses. I showed you on the 1098T. That's box 5. If 5 is bigger than 1, you have no credit because you got a lot of help. You had no out-of-pocket expense.
It's typically the first thing, when somebody hands us a 1098T, typically the first thing we look at.
Yeah.
What's box 5? What's box 1? If scholarships and grants is $22,000 and box 1 is 15, thank you, but we'll use this to verify that residency for your child for claiming them as a dependent, but you don't have an education credit.
Yeah, there's no credit. Qualified expenses do not include payments for room, board fees, or personal expenses, health fees, medical expense, insurance, transportation, other costs, personal living, family expenses. If you got a scholarship for just room and board, you actually are required to pay tax on it. Because you're not allowed to write that off. That's actually income. So what if we allocate certain scholarship proceeds to the students' non-qualified expenses rather than qualified expenses? We may be able to increase the education credit if we include certain scholarships or fellowship grants in the student's gross income. All right. Knowing that I can't write off expenses related to room and board, and I've got a scholarship for 10 grand, but I'm only showing tuition and fees for 8, the automatic thought is that, well, I have no credit, which for the most part is what you want to do. But there is an option.
Yes.
If the scholarship is also paying for room and board, I can choose to use the scholarship as taxable income and say all the scholarship went to pay for room and board. None of the scholarship went to pay the tuition and fees. So now that I've included this in my taxable income, all the money that's up in tuition and fees, keeping it simple, is now eligible for the tax credit.
Yeah, but you don't even have to go that far with it.
No, but it's
If you've got $10,000 in scholarships and $8,000 in qualified education expenses, and the scholarship money could be used for room and board, for your dorm expenses
incidentals.
and your cafeteria expenses, even though that may not be what that paid for. Maybe mom and dad paid for that out of pocket. If the scholarship could be paid for that,
Yes.
and you can come in and provide an invoice showing that the dorm package and the cafeteria package was paid and how much that was, then we can subtract that from the amount of the scholarship and claim that $6,000 of that $10,000 scholarship went to pay for the dorm package and the cafeteria package. Now you're looking at $8,000 of qualified education expenses and $4,000 of non-taxable tuition that was paid. So you're still left with a $4,000 of education expenses that you can now use to qualify for the credit.
All right. So again, we're going back to the slide. So what if we allocate certain scholarship proceeds to students' non-qualified expenses rather than the qualified expenses? Which is what we were talking about. We may be able to increase the education credit if we include certain scholarships or fellowships, grants, in the student's gross income, which
Yes.
is what I said.
Right. The $6,000 for the dorm package
Yeah,
would have to be included in income.
right. It's an increase in the education credit may exceed the increase of, if any, of the student's tax liability. Scholarships, fellowships, grants, and that includes included in income won't reduce the student's qualified education expenses available to figure your education credit. You've got to look at this in multiple ways, because as I'm trying to increase money that's available for an education credit, I'm also increasing money that's being taxed.
Taxable income. Yeah.
So there's a trade-off, and we have to be careful that we don't make it too bad the other way. Yeah, you got a $2,000 education credit. Great.
You got $3,000.
You got $3,000 in taxes. Not so hot. You'd have just left it alone. No education credit, but we're not taxing it either.
Maybe you only have $500 in
Yeah.
tax that you owe.
So keep in mind, we're increasing our adjusted gross income, so it's going to have an adverse effect not only in our taxable income, but it might disqualify us for other credits.
Yeah. Yeah.
Chances of it happening in our office is pretty slim, but it's possible.
Typically with our clients, if you've got more in scholarships and grants than you have in qualified education expenses, we just we err on the side of caution and don't give them the education expense.
Yes, because what we're doing here is we're opening ourselves up to an IRS levy. Well, we got to, because one of the copies of 1098 went to the IRS.
No, if we're given a 1098-P by a client for a student, typically that means mom and dad are claiming them as a dependent, and 1098-Ps we use for guardians to prove they live with mom and dad.
The scholarship or fellowship must be tax-free to be able to do this. We're electing to tax it. I could leave it alone and nothing happens.
Right.
And that's usually the best route.
Right. Like your full ride sports scholarships.
Yeah. Leave it alone. You're just going to make it worse.
Right.
Also, the scholarship or grant must be one that is to be used for non-qualified expenses. If the rules of the scholarship say it must be used for tuition and fees only, then I can't choose to move it over into taxable income because I'm not allowed to.
Right. It's not eligible.
And then there's a number of expenses. I'm just going to let you
Number of examples.
read those on your own, just because I think they make it more confusing in this format. When you can sit down and read it and digest it, I think it works a little better. All right, so let's talk about the credits themselves at the moment. The American Opportunity Credit is based on a maximum of $4,000 of qualifying expenses paid in the tax year for each student. Pay attention to that line. Each student. Credit is 100% of the first $2,000 you spend and 25% of the next $2,000 that you spent, giving a maximum credit of $2,500. The amount of the credit is reduced if your margin of adjusted gross income is between $80,000 and $90,000, or double that if you're married filing jointly. Can't file for this credit if you're over the limit. Can't file for this credit if you're married filing separately. Once figured, the credit is 60% non-refundable, 40% refundable. So Frank and Ada have 3 dependent children, Bob, Jerry, and Martha, all in their first 4 years of college, which is important right now. We haven't told July yet. Modified adjusted gross income is 65. Taxable income 35. Tax on slide 16 to 1040 is 38.35. No other credits. All the children are eligible for whom Frank and Ada paid qualified education expenses.
Another thing.
Bob's qualified expenses are $800, so the American Opportunity Credit for Bob is $800. Jerry's qualified expenses are $2,400, so the American Opportunity Credit for Jerry is $2,100. 100% of the first $2,000 and 25% of the next $2,000, so 25% of $100.
$400.
Yeah, $400. My bad. Martha's qualified expenses are $6,000, so the American Opportunity Credit for Martha is $2,500. She's maxed it out.
Mhm.
And remember, this is a person-by-person basis for the American Opportunity Credit. Each person has their own $4,000 pool that they're working out of. Frank and Ada's total American Opportunity Credit is $5,400. $800 plus $2,100 plus $2,500. The non-refundable portion is $3,240, which pays for most of their taxes, not all of them. The refundable portion they can claim is $2,160. $5,400 times 40%.
Which covers the balance of their taxes and gives them a little extra.
Yeah, plus whatever they had withheld from their paycheck. And there's
3 kids, 65,000. They might even get a
little bit of EIC, but not much.
Not much.
An eligible student for the American Opportunity Credit must meet the following qualifications. Need the American Opportunity. I'm not even going to say that word anymore. I'm so sick and tired
The
of
Hope
them
credit,
including
yeah,
it.
they need to take it out.
It's so old, it's not relevant.
Yeah, because there's nobody left alive that took the Hope credit that's still going to school that could qualify for this.
Yeah, the last year the Hope credit was 2008.
Right.
It's 2025.
Right.
All right. To qualify for the American Opportunity Credit, you cannot have taken the American Opportunity Credit for you or anyone or by anybody for this student. So this student can't be on American Opportunity Credit of anybody's tax return for any of the 4 prior tax years. You can only do this credit 4 times. At the beginning of 2024, the student had not completed the first 4 years of post-secondary college, as determined by the educational institution. So they're still a freshman through senior,
Which means
which means a graduate student does not qualify for the American Opportunity Credit
and neither does a 5th-year senior.
if they took it 4 years.
They would have.
They
Freshman?
probably did.
Freshman, sophomore, junior, senior.
Probably.
They're a 5th-year senior. They don't qualify. I'm going to assume if the American Opportunities Tax Credit has been being taken, it's been being taken since they went to school.
And that's probably true, but just make sure you do your research on that, because you might not have taken it that freshman year, because the freshman year is generally a half a year. That's starts off in the fall semester. If you were smart, you might not have taken it then.
Yeah.
So you got to look into it.
Yeah.
Just because I'm a 5th-year senior does not automatically disqualify me. I was a 6-year senior, but I was a double major. But that was back during the Hope. No, that was before that even. So, For at least one academic period beginning in 2024, the student was enrolled at least half-time in a program that leads to a degree, certificate, or other recognized education credential. There's that box on the 1098T saying the student was enrolled for what they consider at least half-time.
Yep.
So for Wichita State, full-time was 12, so that means you were taking at least 6 credit hours. For any semester in the period. And the other thing is that I must be taking classes to get a degree, to get a certificate. There is an end game. If I'm taking classes just because I like taking classes, and we all, well, okay.
Because I like economics for fun.
Yeah. I ran into those people. Hell, they took classes to be taking classes.
Your career students.
Yeah. You know, well, great. I like the idea is that you can never have too much knowledge. This is true. But Jiminy Christmas, that would be expensive. Here's the other thing that drives me bonkers.
Yeah, I don't like this last one.
At the end of 2024, the student had not been convicted of a federal or state felony for possessing or distributing a controlled substance.
I can
If
be
you've been
next.
convicted for having a joint, you don't qualify for the credit. You're a convicted axe murderer, you qualify for the credit.
No, it has to be a felony example.
Well, nowadays, but you get the gist of it.
I can murder mom and dad, go to prison for 15 years, come out,
And
go
qualify
to school, and qualify for this for this credit.
Yes.
But
have a dime bag.
if I was a freshman in college and I was at a party where a buddy of mine had a gram, which is felony weight, and we get busted together, now I have a felony conviction for being in possession of a gram of cocaine. I no longer get to have this credit.
I have a problem with the inherent unfairness of that.
I do too.
Just that one felony. Just the
Just
one.
that one.
Possession.
Mm-hmm.
It should be awful.
If you're going to do that, it should be that.
Yes.
Why is the axe murderer, the rapist, better than the guy who had a dime bag? So I have a problem with that. Also, the key word is convicted. I asked the question one year, and the guy said, well, my court date is next week. Well, you haven't been convicted yet. You qualify. Yeah.
Yep.
Well, he was pleading guilty, but it wasn't until next week. He's still innocent. And really, his court date was this year. My question really is going to be,
The end of last year.
as of the end of last year, well, he was still fine. This is where Matt was having his discussion earlier. If you're under 24 at the end of the year and the following condition apply, you cannot claim any part of the American Opportunity Credit as a refundable credit. You can get the 60% non-refundable. You can't get the 40% refundable. That is, your allowed credit is the non-refundable part only. You do not qualify for the refundable portion if A, B, or C, 1, 2, or 3 apply to you. You are under 18 at the end of the year. You're 18 at the end of 2024, and your earned income was less than one half of your support, or you're over the age of 18 but under 24 at the end of the year, and a full-time student, and your earned income was less than one half of your support. You're a qualifying child of somebody else.
Correct.
Notice I didn't say anything about address on there.
Well, no, but my point was if he was living at school and was supporting himself.
If he could do that, yes. And
He
that
might-
was my argument, and he never talked about support.
He might not have been paying for his own schooling, but he was paying his rent and everything else. That's where I was. That's where I was going.
Yeah,
with
you have changed your argument, though. So
No, that's where I was going with
that's
it.
where you're going with it. Yeah, that's fine. That's why I said I need to answer the support question, and I'm looking from that because remember, think about this for a second. this dude or girl, if we should have a picture of a guy up here, but this dude or this girl is covered by mom and dad's health insurance until they're 26. That's support. Who's paying for the cell phone? Who's paying for the car insurance? Who's paying for...
Right.
We have to answer all those questions. 2, at least one of the parents was alive during the year. Well, if both of your parents are dead, then really not a point.
Yep.
You're not really... I mean, technically, you could be a qualified child to somebody, but the IRS is not going to split hairs on that one. A scholarship received by a full-time student is not considered support, which is consistent. We've talked about this before. If you're getting a Pell Grant and it's paying for all of your school, you're not really providing it. It's not your support. All right, so here's a summary of the American Opportunity Credit. We have a $2,500 per eligible student of credit available to play with. We have income limits, 40% refundable, 60% non-refundable. You must be in the first 4 years of an educational path. You must be trying to go down this path to get some sort of certification. Must be enrolled at least half-time for at least one semester in the year.
How many weeks are in a semester?
18.
18.
18 weeks in a semester.
Oh, yeah, I guess that's right.
Yeah,
I was thinking 9. So
9 weeks.
9
it's
weeks and a
half
quarter.
semester.
9 weeks and a quarter. Except for summer semester.
Right.
Right.
It the math doesn't work out right. So that's usually a lot shorter, but the classes are usually longer to make up for it.
Instead of a 45-minute class, you might have an hour and a half.
Or instead of something that might have been only on Tuesday, Thursday nights, it's now on Monday, Wednesday, Friday nights, or,
Yeah.
Let's see here. What else? Must not have a felony drug conviction. I must have tuition. I can buy my materials from any place, though. I just have to have the receipt. All right.
I do want to make one clarification. This credit is good for the first 4 years of post-secondary education. So your first 4 years of college. So if you have a teenager who's
Yes.
taking college courses as a high school student, and when they graduate high school, they get their high school diploma and they get their associate's degree, and they turn around and they go to WSU to complete their education, and they're a freshman technically at WSU, and they get their bachelor's degree after 2 years. So you've only claimed the American Opportunities Tax Credit for 2 years. You're done. Once you have a 4-year degree in your name, you are done. Whether it took you 2 years to get it, 3 years to get it, or 4 years to get it. You don't get that credit for 4 years, period.
Yeah.
It's, and
The total classes, or what if you change your major mid-semester?
It
it doesn't matter.
So it's just
Once,
classes,
It's just
period.
classes, period.
yeah, once you have a 4-year degree,
You no longer
you
qualify
no longer qualify.
for the American Opportunity Credit.
Right. And that is true if you go in and get a bachelor's degree in nursing, and then you turn around and you go for a bachelor's degree in economic and finance, you don't get it for that second bachelor's degree. You already have one. Even if you didn't claim it all 4 years for your nursing degree. You don't get it for each 4-year degree. You only get it for the first 4-year degree. And that's where the lady on the phone was trying to get at. Because her child was her child was getting a degree, an associate's degree when she graduated high school. So she's only going to get 2 years at a 4-year college before she gets her bachelor's degree. What happens to the other 2 years of this credit?
And she did it two years in a row.
So,
And remember, you can only do this 4 times total at best.
And then it switches over to the life.
And then you have to do lifetime learning.
yep. And
But
that's non-refundable.
keeping in mind that since I can only do this 4 times, let's say that I'm on a traditional path, and maybe it gets put it, toward the end. Just look at it from this point of view. Like I mentioned to Matt before, if I'm on a traditional path, I didn't start my freshman year, start taking any classes until the fall semester after this year, after May, where I graduated from high school. Is it in my best interest to take the American Opportunity Credit this year? I only have 1 semester of eligible expenses, and I only have 4 bullets. 4 times to pull this. Is this the year that I want to use one of them? Or do I want to wait, maybe take lifetime this year, and then wait to next year to do my first, because now I'll have 2 semesters, bigger expenses, larger credit. It's an
Right.
option.
It's an option.
The danger is that, you get down to your last semester, if you're on a traditional path and you manage to hold on to it, which few people really do.
Yeah. If you graduate in 4 years and you skip your first year as a freshman, you end up basically the same way. You either get a half a year as a freshman or you get a half a year as your senior. Because the year that you graduate, you're only going to have 1 semester.
If you manage to maintain your traditional path.
Right.
Now most people end up, taking at least another semester because they goofed off too much. Didn't take the right courses for their degree.
Yeah.
Or changed majors.
Right. Change
Now, if you
majors.
flunk out in between times, can you restart?
You can't restart, but you can have a blank spot. So I decided that I'm going to take a year off. So, they don't have to be consecutive.
Yeah. He goes for 2 years and his grades started falling at the end of the second year. Mom and Dad send him on a road trip across Europe for a year.
Or he
And then
decides to go to school in Norway for a year.
Yeah. And then comes back to the university that he was at the year before and starts back up again. You can have that gap in there.
Or a different university, doesn't matter.
Yeah, or a different university. You can have that 1 year gap or 5-year gap.
5-year gap. You have a 20-year gap.
Yeah. So
As long as you haven't graduated yet.
right. So long as you haven't claimed the credit more than 4 times, and you don't have a bachelor's degree. If you go to Norway, spend 3 years in Norway, and come back home with a bachelor's degree, you're done.
Yeah. I chose Norway. I should have chose the ship.
Shit.
Oh, man. Well, at least back in that time.
Underwater welding, are you?
Well, no, it wasn't that. It was a semester abroad, and what they did is that school was on board this cruise ship that went to different ports of call, but you took classes in between the ports of call on board the ship.
That would suck.
Well, some people did it, but I remember those advertisements.
I was gonna say that sounds kind of like that L. Ron Hubbard Sea Org floating ship school thing.
I have no idea what the hell it was. All right, so let's talk about the lifetime learning credit. Is a completely non-refundable credit. The credit is based on up to $10,000 of qualified expenses paid during the year for all eligible students combined. There's one pool for all students drawing on this $10,000 20% at a time.
Yep.
The credit equals 20% of the combined expenses, providing a maximum credit of $2,000. So 20% of $10,000, $2,000. Your max credit, no matter how you get there, is $2,000.
Assuming you have the tax to use it all.
Yeah. And if you go over, you don't get to carry it over. You just lose it. Don't use it all up, you don't get it.
Yep.
And of course, you don't qualify for this credit, and it's the same rules. At least these are consistent as the American Opportunity Credit.
Yeah, your phase outs are the same. 80, 90, 160, 180.
An eligible student for the lifetime learning credit meets the following. The student was enrolled in one or more courses at an eligible educational institution. She had to take a class sometime. The student is taking a course for post-secondary education to acquire or improve job skills.
I go to WSU to get my enrolled agent.
Go to WSU and get a degree or to take some classes in Spanish.
Yeah.
That would be very helpful.
Yes.
Go to WSU to take classes in Swahili, not so helpful. I would still probably take it because I could probably come up with one client that I know I have one.
If I lived in a Gulf state, that might be a different story.
Yeah. But, you know, my job as a tax preparer, and I decided to go to take a class in underwater basket weaving, I don't qualify for the lifetime learning credit. There is no limit on the number of years the lifetime learning credit can be claimed for each student. You can take it 99 years. You're old, but you could do it.
That applies even if you were to go in and take like a refresher course.
Yes.
So you're an enrolled agent, but you need a couple of courses as a refresher. You can, whatever you paid for those courses in qualified expenses, you can claim because you are improving or maintaining your educational.
So, for an example, to actually put some things on what he's saying, so you have a teacher or a nurse,
Yes.
and they're required to take a certain amount of continuing education credits to maintain their certification. If they pay for these, and so like my wife did, she would take it from Baker, because
Right.
usually they were the easiest to deal with. She would get a 1098-T from Baker. I could write it off under lifetime learning credit.
They ain't great, but it's something.
Yeah, it wasn't a huge amount because it was cheap,
Yeah.
but it was something. I want to go back and talk about an eligible educational institution real quick. First, and I've mentioned this before, and I want to mention it again. The other part about being an eligible educational institution, I mean, yeah, it's being able to get the federal
Faster.
aid, but you also have to have a physical campus someplace.
Yeah.
Whether or not you actually ever go there is irrelevant. The fact is that you could have, if you wanted to, is all that matters.
A complete online school does not count.
Yeah.
Even if you could get federal student aid for that online campus, if they don't have a physical location that you could have attended, doesn't count. And I don't think you can get FAFSA if you don't have a physical location.
No, you're not going to get one because you're too fly-by-nighty.
Right.
I can't think of a good example right now of any of that, but
I was gonna say most
most of them are gone.
Yeah, most of the ones that you see on TV, like SNHU, Grand Canyon University,
They all qualify. They have
Phoenix,
an actual campus.
they have an actual physical campus. So, I mean, I don't.
Now, whether or not you ever go to New Hampshire, don't care.
Yeah.
Not relevant.
Even though that company that's providing the information online has an
Oh.
address.
Trump University.
I was trying to avoid that, but since you're a fan of him, I'll let you.
No, I'm just that
Yeah.
the one. That's the one that popped in my head
Yeah.
because I don't think they had an
Had a
actual physical campus.
No, I don't think so either. So he wouldn't have qualified for this credit.
Right. Because that was solely online. That's the only one that I could think of off the top of my head.
So back to this lifetime learning credit. up to $2,000 in credit per return. No matter how many people are claiming the credit, once you get to $2,000, you're done. Same phase-out levels, totally non-refundable. Doesn't matter where you're at on your degree path. You can take this if you're doing graduate studies. You can write off all your expenses,
Mm-hmm.
all your eligible expenses.
Up to $2,000.
I don't have to actually be trying to get a degree. I'm just trying to improve me.
Mm-hmm.
Felony drug convictions don't make the student ineligible. Tuition and fees required for enrollment, attendance, including amounts required to be paid to the institution for course-related books and equipment. I had to buy it from the university.
No idea where anything is.
For lifetime learning credit, I gotta buy it from the school.
Those stuff purchased through the school bookstore, those don't show up on the 1098T, do they?
No, but
As
I
part-
have a
You
receipt
have a
from
receipt from the school.
university bookstore.
Yeah. Okay.
Ryan attends culinary school at an eligible institution, $2,400 for course study, which include tuition, equipment, and books required for the course. The school requires that students pay for the books and equipment when registering. The entire $2,400 are therefore eligible, but he's only going to take 20% of that.
Yeah. $480.
To enroll at higher ed, Carl's was required to pay the tuition of $1,400 to attend classes and to buy $200 worth of books from the school. He also bought review books and other equipment for $800 from Amazon. Well, for lifetime learning credit, that's a problem. He can only claim the $1,400 he paid in tuition and the $200 he paid for books from the school. The other $1,600 he doesn't get.
They spend mid-November to
The other $800.
Yeah, the other eight.
Yeah.
Can't use the lifetime learning credit for the same student who is getting an American Opportunity credit.
You can't double dip.
One or the other. Per student. I can have both credits on my tax return,
Yeah.
but I better have multiple students.
Yeah. If you've got 4 kids in college and mom and dad are both taking college courses, you could have 4 American Opportunity tax credits and a lifetime learning credit for mom and dad,
Right.
all on the same tax return.
So here's an example of kind of what Matt just said. Darlene Tom married one dependent son, 5th year in college. They've claimed the American Opportunity credit 4 times. Both Darlene and Tom take courses at the local community college. Tom's expenses were $1,800. Darlene's $1,450. $7,476 for their son. Their total qualified expenses are $10,726, but they're capped at $10,000 of expenses. 20% of that, their total credit is $2,000 for everybody.
Yeah.
Because their son doesn't qualify for the American Opportunity credit. They've already used it 4 times.
And they have to have a tax liability, otherwise it's pointless.
Yeah. American Opportunity and Lifetime Learning Credit may be both claimed on the same tax return, but not for the same student. For each student any year, you must choose only one of the credits. You paid unqualified tuition expenses for more than one student in the same year, you may claim the American Opportunity credit for one, lifetime learning for the other. Or you may claim the same education credit for both students. Remember that total expenses eligible for lifetime learning in per 1 calendar year are $10,000 per return, not per student. American Opportunity is per student.
Yeah.
And then that one's just a comparison of the two different types of tax benefits that we're talking about. Claiming the credit, use Form 8863. Part 3 is the one where you're identifying where they're going to school. There might be multiple schools too.
Mm-hmm. Yeah, if you have multiple 1098Ts for one student, there's nothing wrong with putting down, in our system, putting down 3 different 1098Ts for that student.
Yeah, they'll take it. Even though they only need one to qualify.
Well, I mean, if
Yeah.
you go into separate institutions.
Right. Part 3 is for the American Opportunity Credit refundable part. No. No, part 3 is for both lifetime learning and American Opportunity Credit. Part 1 is for the refundable part.
Yeah.
This credit just jumps this form just jumps around all over the place.
Part 3 is basically where you tell them what school that child went to.
So here's part 3. You're telling them where they went. Here's part 1 and 2. Part 1 is the refundable part of the American Opportunity Credit. Part 2 is the non-refundable education credits. So all of the lifetime and 40% of the American Opportunity Credit is appearing in part 2.
Yeah.
I'm not going to talk about that because it doesn't exist and it hasn't existed for multiple years.
I had this client just ask me, and I hope I told him right. He asked that OVA, that does go into effect for 25 tax year, right?
Yes.
Yes.
Yeah, that's what I thought. Okay.
If you paid interest on a qualified student loan, you may be able to take a deduction as an adjustment to income. Deduction is generally smaller than $2,500 or what you actually paid in student loan interest. Cannot take this if you're married filing separately or claim that's dependent on somebody else's return or you're paying off somebody else's loan. But this is one of those things whereas I know what it was now. It struck me what I wanted to remind what, because I didn't say it before. As a quality tax professional, when we're looking at the child tax credit, the additional child tax credit, if your child that's listed on the return is 16,
Oh yeah. Please notify
we
your
will
client.
be talking to the parents saying, hey, next year your return, regardless of anything else, is going to change. Your refund is going down $2,000 because you're no longer eligible for this credit. If anything else was all the same, we're telling you your refund is going down $2,000. Actually, technically, it's only going to be
15.
$1,500.
Yeah.
But I'm getting their attention.
Yes.
$2,000 because your child no longer qualifies for the child tax credit, the
Yeah.
additional child tax credit.
Johnny will be 17 next year. You're not getting a $2,000 child tax credit. You'll only get a $500 other dependent credit.
So if you're, all things being equal, if their refund was over $2,000,
Their refund's going to be $1,500 less next year.
yeah, it's going to be less, but they had enough to play with.
Right.
If they were only getting a $100 refund next year, they're going to owe almost $2,000.
And that's when I discuss, hey, we need to.
We
make
need
sure-
to adjust our W-4s.
Yes.
Yes. Adjust the W-4 or go in on line 4C and add an additional amount to be taken out.
That's something as tax preparers where people come to see us because that's something that TurboTax won't say.
Yeah.
TurboTax won't warn you that, hey, next year, this kid no longer qualifies. Your refund's automatically going down no matter what you do. That's our job. That's why people come to see us.
Well,
That's
that-
where we earn our money.
Yeah, that, and we'll get clients that will come in and sit down, and we'll be going through the return, and we'll be talking, because we talk with our clients, and the client will make the offhanded comment, yeah, my son's 18 this year, so I won't be able to claim him as a dependent next year.
Well,
Really?
that's not necessarily true.
Is he going to go to college? Well, yeah, he's already set to go to Friends University, whatnot. Going to live at home? Well, yeah. Why
Still
can't you
dependent.
claim him?
Yeah.
Well, because he's over 18. Yeah, but he's going to be a full-time student at Friends. He's going to be living at home. You're going to be supplying everything. Yeah? Well, yeah. You can claim him as a dependent.
For up until he's 24 or graduates, whichever comes first, or leaves school.
Yeah.
But the reason why that struck me is because here's another opportunity to earn our keep as tax preparers.
Yes.
Somebody says, well, I didn't get my refund last year because they captured it for student loan. Well, I know that some of that money at least went to pay interest on that student loan. Have them call the student loan company
and find out what portion of that
And
was
get
student
a
loan.
letter to find out how much of that recapture of last year's refund went to interest, and I can write that off on your taxes. They're not going to send that letter automatically.
No.
Only if you're making actual payments.
Yeah,
If
that,
you're doing a capture, no.
but you're eligible to get that. You can request it. So and when I hear those magic words, yeah, I didn't get my refund last year because I own student loans. Get this letter.
Yeah.
Have
I
the client
never
call.
do.
Yeah, have the client call
I'm so bad.
and get that letter to find out how much of this we can actually write off.
I don't get a whole lot of recaptures for student loans. We get
No.
more recaptures for
For
child support.
Child support.
Well, the last several years,
Court fees.
they haven't been taking it.
Yeah,
Yeah.
and
But I
that's
think it starts back up this year.
Mm-hmm.
apparently unless you sign up for ICE.
Oh, God. I
Oh,
figured
if I'm
out
an
what that
ICE
commercial
agent, I
is.
don't have to worry about it?
Yeah, if you're an ICE agent, they'll forgive your student loans.
And if you're a police officer and sign up for ICE, you get a $50,000 sign-on bonus. It's been all over the radio.
All right,
Wow.
so if you were actually making the actual payments, you will get a 1098E showing how much you paid in interest. Remember, I don't care how much you actually paid, you're only able to write off the amount of interest, which is in box 1.
Yeah, I had to explain that to a client last year. He came in with one of those. He took a withdrawal from his retirement to pay off his student loan. And in the box, it said $30,000. I plugged it all in. He's like, well, what do I only get $2,500 for it? It's $30,000 in interest. It's capped at
Capped.
25.
Also, there's an income phase out too.
And he was like, well, that just sucks. I'm like, well, I understand, but it's the federal government. They're only going to give you $2,500. They're not going to let you take $30,000 off of it. He was hoping he'd get the whole $30,000 and he wouldn't have to pay anything in taxes last year.
I'm not going to worry about that because the only way you got a student loan was to actually pay for classes.
Yeah. Well, that and anymore, most student loans, FAFSA programs, don't send the money to the individual applying for it.
No,
they send it to
straight
the
to the school. Yeah.
And then at the end of the semester, whatever portion of that was designed for that semester, if there's any extra, then the school will cut the student a check for whatever that balance was.
Now, this is under a slide labeled for student loan interest deduction, but actually it could be applied to basically everything that we've talked about today. Expenses must be reduced by certain non-taxable benefits. We talked about getting scholarships, but also if you got educational expenses paid for you by your employer, you don't get to take credit off of that.
GI,
Your employer does. Yeah, GI Bill is great.
GI
example.
Bill.
If you use U.S. saving bond interest to pay for higher education, well, that was not taxed.
You don't get to claim that as
You don't get to double dip that.
you know,
Took distributions from from an education savings account. Well, when you do that right, you don't pay tax on it. So therefore, you don't get the double dip. The tax-free scholarships, we already talked about. The veterans assistance, which we already talked about. Any other non-taxable payments received for educational expenses. I don't know what's left, but if you can think of it,
yeah,
if you didn't pay tax on that money, you can't then turn around and use that to figure out education credits. This is being driven into the ground. Let's see. Ah, there it is. I was looking for this. You do not get the student loan interest deduction if your marginal adjusted gross income is above $95,000 if you're single head of household or a qualified surviving spouse, or $195,000 if married filing jointly. Well, those are big numbers. It's usually not in play, but there is an income cap.
Mm-hmm.
I'm not sure I want to go down this road.
Cancellation of student loans. I mean, with that, it depends. There's
That's why I don't want to go down this road. But let's just venture a little bit.
You can get a 1099-C for cancellation of debt, or you may not get anything. It depends on how they determined how they were canceling your student loan. If you've been making payments on your student loan for 20 years or more and you still have it and they cancel it, you're fine. You don't owe anything. If they cancel it because you've never paid on it over the last 15 years and you get a 1099-C for $50,000, it's income.
Yep.
If you went to school, you started paying on it, became disabled, wasn't able to pay on it anymore, you've been on an income-based repayment plan, so your actual repayment number was $0 a month because you only have your disability. After 5 years, you can apply to have your student loans forgiven, and you don't get
pay
anything
tax.
back. So it just
The cancellation of student loans may or may not be a taxable event,
yes,
depending on other circumstances.
Mine was, you know,
Most of what's happened recently
not,
is not
yeah.
not taxable.
but
If-
I filed mine under a different disability.
Well, you filed yours under the Disability Act. You are totally and permanently disabled. Therefore, you don't make enough money to pay back your student loan. If you were to do an income-based repayment plan, your monthly repayment would be $0. So at that point, you apply for forgiveness. They forgive your loan. Because with you on disability, you're never going to be able to pay it back.
Well, they gave it to me on disability. Well, I was on disability.
Right. You have to be disabled and on disability for at least 5 years before they will grant you a disability exclusion and forgive your loan.
Right.
Basically, the easiest way to deal with this is if somebody has their loan forgiven, they're going to get a letter from the institution forgiving the loan, and whether or not they get a 1099-C.
If they don't have the 1099-C, you can say, "Hey,
It's-
you're done. You don't have to worry about
Yeah.
it." If they have a 1099-C, you got to report it as income.
I've been on since 2009, and I did not give them, they will not.
They'll not cancel your loan.
All right, so let's switch gears a little bit. Let's talk about savings accounts for education. Education savings accounts, sometimes they're referred to as Carbondale, but they're actually more than others. And when I talk about this, let's keep in mind the Trump account that we talked about last time, because from what I'm gathering, a lot of the rules are going to apply,
Yes.
except for how to tax the disbursement. Coverdale Education Savings Account or Trust is a custodial account created and organized in the United States for only the purpose of paying qualified education expenses to the designated beneficiary of the account. You're opening up this special, really in effect, a special IRA is one way to look at it.
Savings account.
Yeah. For a minor child that you think is going to go to school or higher education, although we're going to find out that we're not limited in that department.
Yeah, because this one you can do special needs too.
To qualify, the account must be designated as an education and savings account when it's created. Governing document must be in writing to satisfy their requirements. The trustee or custodial must be a bank or an entity approved by the IRS. It must provide that the trustee or custodian can only accept a contribution that meets all the following conditions. The contribution is cash contribution. The contribution is made before the beneficiary reaches the age of 18, unless there's special needs.
Mm-hmm.
The contribution won't result in total contributions for the year being more than $2,000. Well, that's a little bit better, or a little bit worse than the Trump account, which was at 5.
Yeah.
And they might go back and fix this. We don't know.
I wonder though. I wonder if the same rule is going to apply. could I open a Coverdale
Yes.
and put $2,000 in it, and put $5,000 in the Trump account?
I'm going to say yes because those are two different.
Okay.
Money in the account cannot be invested in a life insurance contract. Of course, if I'm going through a bank, they're not going to do that anyway. Money in the account can't be combined with other property except in a common trust fund or a common investment fund. The balance in the account must be distributed within 30 days after the date the beneficiary reaches 30, unless there's special needs or the person died. So, here's a good example. My middle son turns 30 today. If he had anything left in an education savings account, he's got 30 days to get it out of there. Well, that's timing.
Jaden?
No,
No.
Jonathan.
Oh, Jonathan. Okay. I was going to say, wait a minute. Jaden wouldn't have to do it.
No, Jaden still got got 9 years.
Okay.
If he had an account. Well, he doesn't, so none of them do. But
Right.
James turns 21 in 5 days. So these next 5 days, James and John are the same age. Let's see here. When the account was established, the beneficiary was under the age of 18 or special needs. Contributions to these are not deductible, but the amounts deposited in the account can grow tax-free until withdrawn. Now, that's where it's like an IRA. It grows tax-free.
Oh, is this, I'm sorry, is the Coverdale through the institution of the school, or is it?
Bank.
A bank?
Yeah.
Just, I could go to Merrill Lynch too. They would have something, but yeah, it's not through a school. It is through a financial institution. They say bank up here, but I know that if I went down to Merrill Lynch and talked to them about a Coverdale, they'll have something.
So they'll still send it in the same format?
They'll set it up the way that they need to.
But it would come to us if we needed it, the same as, like you said, Merrill Lynch or on those other.
Yeah, the disbursements will show up on a 1098T, or no,
1098Q.
1098Q. The computer will throw a fit
Yes, it will.
because they don't, for some reason, the programmers don't handle it very well. And I don't understand why. But in the meantime, they're most likely getting that 5298, which shows how much money is in the account as it grows that you do nothing with. We all are familiar with that form.
Have you ever seen an account like that?
Yes,
529. Coverdale 529,
are the same.
basically the same thing. The Star 529 education accounts, Coverdale ESA, it's the same thing.
Essentially the same. Contributions $2,000 a year per beneficiary. I don't care who's putting money in. They can only put in a total of $2,000 collectively. For a year, withdrawals from an account are not more than the designated beneficiary's adjusted qualified education expenses at an eligible education institution. The beneficiary will not owe tax on the withdrawals. And this is where it gets a little bit more fuzzy. Just, I'm using my disbursements to pay for school stuff.
Mm-hmm. You're good to go.
I don't have to pay tax on any of it. This is where it differs the way from the Trump account because my disbursement on that one is going to be taxed at long-term capital gains, which might still be zero.
Not for education, it won't be.
No, it didn't make that distinction.
Yeah.
In fact, the sentence doesn't read that way at all.
I thought it said.
Qualified withdrawals, college first home, small business startup, taxed as LTCG.
Okay.
So no, it's different.
Okay.
It should be this, but it's not.
Depending upon the income of the person with the tax documents, it could basically be the same thing as this.
Or it might be taxed at 15%.
Or it might be taxed at 15%, depending upon the income.
There is no limit on the amount of separate Coverdale's ESAs that could be established for one beneficiary. However, I don't care how many accounts that you have, there's only one $2,000 pool. You have 20 accounts, but in all, you can only make $2,000 contribution to all of them by anybody. Do you follow that? I see the question. It's really, I mean, it sounds confusing, but at the core of it is grandma, grandpa, mom, and dad, all of them can only put in total, of all of them, $2,000. Whether grandma put in all $2,000, nobody else could. Well, one way that somebody might think, well, I'll open up other accounts. This is what that stops. You can't do that. If a portion of the education and savings account is taxable, it's calculated based on the earnings that have accumulated tax-free. Remember, the money that was contributed to this account had already taxes paid on it. So as you take that money out, you have to pay taxes on it again. The only thing that's going to be taxed is the amount that it grew if you're taking it out for reasons other than education. And it's up to the plan administrator to come up with that determination. An eligible post-secondary school is defined as an education institution such as a college, university, vocational school, or other post-secondary education institution eligible to participate in school aid program. Well, that's consistent. However, eligible elementary or secondary schools is any public, private, or religious school that provides elementary or secondary education, so K-12, as determined under state law. I can take money out to pay for private school and not pay tax on it. I don't have to wait to take money out to pay for university. I mean, that's what you automatically think of when you think of education accounts, but I could be taking it out to send the kid to Bishop Carroll, to Word of Life, to Wichita Independent.
You can do that.
That's what I'm saying.
Oh, okay. Okay. I thought you were saying you couldn't do that.
No, you can do that.
You can do that.
I can't take any tax credit, well, for any of these.
Mm-mm.
We already talked about that. Expenses can be either qualified higher education or qualified elementary and secondary education. Are expenses related to enrollment in attendance at a post-secondary school? Some expenses must be required by the school, tuition fees, books and supplies, and some must be incurred by the students who are enrolled at least half-time, like room and board, computer or peripheral equipment, computer software, internet access, and related services, if it is used to be primarily in beneficiary during the years of the beneficiary is enrolled in an eligible post-secondary school. So again, I can take the money out of this account, go out and buy an Apple computer and a good printer and not pay tax on the distribution. This is a qualified distribution. Oh, and a subscription to Microsoft Office Suite.
Yeah, but don't buy the Apple computer. Buy the Microsoft computer. You'll be happy.
I have both, and each has its pros and cons.
I don't like Apple computers. I don't like Mac. Period. I don't like the OS. I don't like the way it works.
And I just looked at it as kind of a learning curve, and once I got used to it, it wasn't as bad. But it's personal preference.
Mm-hmm.
Below are some of the expenses incurred by a designated beneficiary in connection with enrollment at an eligible elementary or secondary. Tuition fees, books, supplies and equipment, academic tutoring, and some special needs services for a special need beneficiary. Must be required by these expenses must be required or provided by an eligible elementary or secondary school in connection with enrollment or attendance at the school. Look, I'm writing off, or I'm not taxing distributions going to room and board, uniforms, transportation, some other items and services.
Oh, good.
there's this school up there, and they moved in last year, the old Best Western up in Park City. They they took some of the conference rooms and made it into,
Christian school?
yeah, they took the conference rooms and the whole and other places, made it into classrooms. The hotel rooms are actually rooms for students.
You got the one out
Like
by the
stay
casino?
in the room?
No, that's the one at 53rd Street,
Red coach.
the old red coach.
Oh, yeah, yeah.
They're the best like
Yeah,
The red coach in, and then it was a country kitchen for a while. But the kitchen still exists. It just happens now to be for
cafeteria.
their cafeteria. Yeah, that's
I was
correct.
gonna say Country Kitchen had really good catfish.
I like country kitchen. I miss that.
I do too. Now we just go to.
So I mean, but here, those expenses for somebody to go to that school, even though it is a special Christian school, still qualify.
So the rooms themselves were converted into dorm rooms?
Yeah.
Oh,
Which,
that's
if you
cool.
think about it, really wasn't much.
Didn't have to convert anything.
Maybe take out a bed, put in a bigger
A
dressing, but
desk,
otherwise,
or
yeah,
something.
and a desk, a better desk. But yeah, that's what they did.
They kept the pool and everything?
As far as I understand, yeah, they kept the because they had that,
Because the
that
commons area.
they had that play area.
Mhm.
They kept it, and they've been expanding the outdoor playground. If you drive by it right now, that's the construction you see.
Or is that for daycare classes for the people? Or is
Air
that...
K-12.
Oh, okay.
The Better Life Academy or something like that.
Yeah, but yes. I mean, you don't have to. It's not a requirement, but I can,
I mean, technically, this could be used for a boarding school.
Yeah.
You wanted to send your child off to a boarding school, military school.
yeah,
You
yeah.
could
That's a great
use,
example.
You could use this to pay for the tuition and
To
whatever.
send them off to Virginia Military Academy.
There you go. St. John's Military.
Yeah, St.
Academy.
John's up in Salina. That's a good example.
Yeah.
And they're not. Yeah, that's still a secondary school. So. Contributions can be made to more than one account for the beneficiary, providing the total contributions per beneficiary do not exceed $2,000. I don't care how you got there. The cap is $2,000. Anyone can contribute if the person's marginal adjusted gross income for the year is less than 110 or 220 for joint returns. I don't know why this is in place, considering this cap, and there's no tax benefit from contributions. This cap doesn't make sense to me.
No, I mean,
This is the person that can most afford to put $2,000 into somebody's account.
yeah, the one making $100,000 a year.
Well, $100,000 is good. If you made 112, you can't contribute.
Yeah.
That I don't like that rule. Now, if I was using it as a tax break, now I can understand. But since there's no tax ramification, why?
Yeah,
is there
if I put $2,000 in it for my grandchild, I'm not getting a $2,000 credit
no,
or even a $200 credit. I'm not getting any credit for putting money in that account on my tax return.
yeah, we said that. We
Said
said that.
that.
They keep saying the same thing.
Yeah, over and over.
If you go over the $2,000, you must pay a 6% excise tax. So don't put it in there. Excess contributions are the total of the two following amounts: contributions to the designated beneficiary's account that are more than $2,000. Excess contributions for the preceding year reduced by the total of the following two amounts: distributions, other than those rolled over, and the contribution limit minus the amount contributed for the current year. So don't go over $2,000, or somebody's going to pay 6% tax.
Is that total or is that per person doing the?
Well, it's kind of both, because that $2,000 is per person.
Right.
So if you had multiple children and multiple accounts, each one of those is $2,000. So
Grandma,
it's per person.
yeah, Grandma and Grandpa think they're doing something great. You've got 3 kids, all of them have one of these, and Grandma and Grandpa, decide I'm gonna put $3,000 in each one of those accounts. Well, you've gone over by $1,000 in each account. That $1,000 is subject to a 6% excise tax for each account. And then next year, next year they can only contribute $1,000 to each account.
Right.
Because if you pull that 1,000 out, like if you over contribute to your IRA, you get taxed on it unless you pull it out. You can't pull that out without claiming it as income. Even if you take it out and put it into a savings account.
Yeah.
You have to still claim that $1,000 that was pulled out as income because it's not going to qualified education expenses.
Right. So fun.
And so grandma can do 2,000 on one maternal, and paternal side can do 2?
No.
If there's 2
Total.
kids,
Total.
What if you tried to open 2 different accounts? What if the parents already have an account, but the grandparent doesn't know about it, and they go and get an account?
Well, the IRS will eventually put the 2 Social Security numbers for the beneficiary together and see whether or not they've gone over the $2,000 total limit, and then assess a statement to somebody.
Yeah.
That's what I was wondering.
Most likely, the one that made the second contribution, you're going to send them an IRS letter saying, "Oh, hey, yeah, by the way, you over contributed."
so and so has this account and now has this account, and there was $2,000 in this primary account. In this secondary account, you put $2,000 in. We have to charge you a $6,000 excise tax on $2,000 or 6% excise.
6%.
She could be going through different agencies and they wouldn't have to report to each other, right?
That's
They
where
report to
That's
the
where
IRS.
that's
they
where
would
it
report
gets
to the
did.
IRS. The
Yeah.
IRS would be the
So
holding
you may
company
not
that
get
would
caught
figure it
the
out.
first year, but
It'll eventually catch up with you, but yeah.
Yeah. Yeah.
So
and-
yes, if grandma wants to open up an ESA, that's fine. We just make sure that grandma coordinates with mom and dad, and they can have multiple accounts. That's not against the rules,
yeah.
as long as
As long as,
as long as they don't go over the $2,000 total for that child.
That child can have 5 accounts. As long as they don't put more than $400 in each account, you're fine.
Or $2,000 in one account and leave the others alone. I don't care how you
Yeah.
get there.
Yeah.
So your cap is 2,000 regardless.
$2,000 per beneficiary,
Right.
regardless of how many accounts they have
And that's per year.
per year.
Per year.
till they're 18.
Or if
You
they
can't
have special
contribute.
needs.
Right. Yeah. Once they hit 18, you can't contribute to it anymore unless they're special needs.
We spent 20
But at
minutes
this
talking about
point,
this and we hardly ever deal
We
with it.
never
Yeah.
see these though, do we?
I think I've had one 1099.
I get one 1098Q per year. Or 1099Q, sorry.
Because I was gonna say, this is the 8th year I've been.
Yeah, savings accounts are completely
Uh,
different.
Yeah, Matt had one last year. The year before that, Michelle. I had one last year. Shannon had one. You know, these plans haven't been around a long time, and so it's only now are you starting to get to the point where these people are starting to get to that age where they'd be taking it out. And for instance, my wife and I looked into these things, but again, if you didn't take it out for the right reason, you got to pay tax on it. Well, then that wasn't, we didn't see the point.
Yeah.
Because there's no guarantee. How am I supposed to know whether or not my 3-year-old's going to go to university?
Yeah. See,
No, but you can use it on K through 12.
You could, but if they went to public school, I really don't have a need.
so if you had a child,
I mean, yes and no.
I mean, think about it like this: you have a child. When your child's born, your mom and dad open up one of these accounts, puts $2,000 in it every year up until the child's 18th birthday. Your child graduates from high school, decides, I'm going to go do 4 years in the military, and then stays in the military for the rest of his life. Does 40 years in the military. When he hits 30, he has 30 days to drain that account. Because
that can be
he's not
expensive.
because he's not necessarily going to college to spend that money. That
Get
30
transferred
year, that
somewhere.
$18,000 plus 30 years of interest
Not unless you die.
is 100% income to your son. or your daughter.
Hey, this is
And that
Sharon.
goes on their tax return as taxable income.
Hey, I have a question.
So at 30, if that account was worth $75,000 because of 30 years of interest, that's $75,000 of taxable income. Just because they decided to go to the military and not go
He only
to school.
worked until October. So what I was just curious.
Or
how
went to
hard
school
it
while
would
they
be
were in the military and didn't see a need to pull any money out of that because they had the GI Bill covering
I'm
everything.
sorry,
Yeah.
January through July. Because you sent me
Any
August,
amount
September.
distributed from an ESA is not taxable if it is rolled over to another ESA for the benefit of the same beneficiary or a member of the beneficiary's family, including the beneficiary's spouse who's under the age of 30. Okay, so I was kind of wrong. So
Okay, okay,
technically,
because it
according
used
to
be
that, is that
it's
if
actually
John had one, he's got 30 days to roll it over. He can roll it over to Spencer, tax free.
Then the actual settlement sheet.
Yeah,
As
Yeah.
long as they're school.
So.
Well,
yeah,
and
I don't
Spencer's
think you're
3.
until 5.
under 18.
So.
So if in my scenario,
Okay. I
if your son
appreciate
went to
it.
the military, when he hit
All right,
30,
thank you.
if he's got a 2-year-old son,
Okay.
he can roll his ESA over to his 2-year-old son.
And there's no,
No ramifications for
No
it.
ramifications for it, and could begin contributing $2,000 a year into that account until his son reaches 18.
that
Again,
would almost be more.
let's keep in
beneficial.
mind, rollover rules apply. So take your IRA rollover rules and apply them here. So if you're going to do that, do a direct.
Yes.
Otherwise, you're stuck with the 60 days, and you're going to have to come up with a tax to make up.
Yeah.
Remember
Do-
that.
Make it a direct rollover.
Yes.
You could go from your son's beneficiary. He could name one of his children as beneficiary for that account if he wasn't going to use it. And then his kids, your grandkids, if they didn't go to school, when they had kids, they could roll that over to their kids.
What's the percent of interest rate is on an account like that?
That's market.
Goes, does, fluctuate?
Yeah, it's not really. I don't know what the nature of the account actually is. Whether it's special money markets,
Okay.
whether it's mutual funds, maybe limited into risk.
Yeah.
You know, you can only go into low risk mutual funds. I don't know. You'd have to go talk to somebody. That's not our job. That's a financial planner's job.
Right,
Right.
I'm just curious.
But with these, if you did it right, you could almost roll one of these over indefinitely.
Yeah,
Sounds like it.
you could always go to the next kid in line.
That's what I'm saying, if it's not valuable by your percent rate to add into it, like an IRA or whatever.
Yeah. So
Yeah,
if they're interesting,
so this is basically just a savings account for education.
yes.
Yes, that's all it is.
And when you distribute it for educational purposes, it's tax free. It's a Roth. If you don't do it, then it's taxed at regular income rates. And if you wait till you're 30 and you have to take, and you don't have a beneficiary or anybody that you can designate, then you're kind of screwed. You're going to pay a boatload of tax that year.
It's an educational Roth or IRA, depending on how you use it.
Well, it sounds better when it's listed like that. Or when you put the IRA or Roth at the end of it, it makes.
Yeah. But that's the way to look at it.
'Cause when
It's
they say
different.
Cloverdale,
There's some
it
different
sounds like
rules.
Clover-
They're not all the same rules, but they share a lot of rules.
Right.
Yes.
Designated beneficiary of a Coverdell can take a distribution at any time. Well, that makes sense because you can take it for high school.
Yep.
So anytime. Anytime that they need it, they can take it out. So tax-free distributions are tax-free. You took it out for the right reason, you don't pay tax on it. Taxable distributions are those distributed during a tax year that are more than the beneficiary's qualified education expenses. If you don't have any education expenses, it's all taxable.
Yep.
Now, on top of that, Jonathan's also trying to get his administration degree, so any distributions he's been taking would have been taken for himself would all have been actually qualified distributions.
Yep.
Because he's still going to school. He wants to become an athletic director. All right, so that's getting into a bunch of things. Remember, I can't take my distributions from these education savings accounts and use them as qualified expenses for tax credits. That's double dipping.
Yep.
Another thing that exists out there is qualified tuition programs. In Kansas, they call it a Star 529 account.
Basically the same thing.
Basically the same thing. In the case of elementary or secondary schools, qualified education expenses may not exceed 10 grand. Contributions to a qualified tuition program on behalf of a beneficiary cannot be more than the amount necessary to provide for the qualified education expenses of the beneficiary. There are no income restrictions. So don't get a Coverdell, you sign up for one of these apparently. No tax due on a distribution from a QTP unless the amount distributed is greater than the beneficiary's adjusted qualified education expenses, which that's consistent. Qualified distribution is a qualified distribution, no matter whether it's the Coverdell or the QTP.
Rich grandma can open that up.
So this is
Rich
the
grandma.
same as the Coverdell.
Yeah, rich grandma.
Same but different.
Same, but grandma can open up a 529 for their child, for their grandchild, and put $10,000 in the account, and then that $10,000 can be used to pay for tuition at Bishop Carroll. What's the
Word of Life.
Word of Life Academy. They can't put in more than what would be used.
So the Coverdell's capped at 2,000 and this one's 10.
This one's capped. This one's capped at 10 for
10 effectively, but
for
technically.
yeah 10 for elementary school. But I mean, if they still had this and they went to college, and tuition was $25,000 a year at college, grandma could put $25,000 into that
Oh,
account,
okay.
Right.
as long as that account was being used to pay for college.
So here's our 1099-Q that we've been talking about. Distributions from an
You wanna look
education
at it?
savings account are reported to us on this form, and for some stupid reason, the computer hates this form. You can't search for this form. You've got to jump up and down, yell at the sun god, sacrifice a chicken.
Shut it down, open it up 5 times. Get mad, go take a leak, grab something to eat, something to drink, come back.
And then maybe you might find what you're looking for. I don't know
In our
why.
program, it's hard to find.
Oh, yeah.
Oh,
It's
yeah.
hard to find. I don't understand because the form
Yeah,
itself
you're
exists, so I don't know why Drake, since they're the engine, I don't know why Drake can't put in a link for me in the search bar putting in 1099Q to take me to the proper screen.
Well, it's listed as pages 1545 to 1760.
Right, but when you're in when you're in
You can't
Fusion,
type it
when you're
in
in
that
the
way?
return on that left side, when you put in that box 1099Q,
It says no.
it
there's
says
no
nothing found.
There's no
form.
form.
No form found.
But what if you put those
Yeah, yeah,
numbers in
yeah,
there?
yeah.
That's for Drake.
Oh, okay.
That's the one drawback on Fusion. It's powered by Drake, so when it's confused, to borrow a line from the Hunt for Red October, it runs home to Mama.
Yeah.
Oh, okay.
So if it can't figure it out, it runs back to Drake, which may not help you.
Yeah. When you're doing this, it's almost easier. When you go to that search bar, there's that little wording underneath that actually says the codes. If you click on that and then you take your time and you scroll through each one, you can find the right form for it.
Yeah.
But you have to scroll through that form.
But it's not an instant cheat. You gotta sort
No,
it.
you gotta
You
you gotta
gotta-
know where to start.
Yeah.
It's like it's somewhat similar to having a 1099 DIV that has foreign tax on it, and then knowing that there's a box on there that I can check to make it not force a 1116.
Yeah, get a DIV with $30 of foreign tax. If you don't click the box, what happens? The whole system freezes and says you need an 1116. So you say, okay, you bring up the 1116, and then it says, okay, so what country was the tax paid to?
And you don't know.
And you're looking through everything, and there's nothing on there, and you're like, and you can't put
You panic.
you can't put
Yeah,
nothing
because we've come across that.
or
It's like,
various
what
or
is-
anything on the
Yeah.
1116. You can't do that. They want a specific country.
So that's when you have to call your client and say,
No, nope,
No.
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 That's when
No.
you go back on the 1099 DIV and find the damn box that says you don't need an 1116.
1116 not required. You click that box, and it goes, okay, cool, no problem.
Yeah.
And the headache you just generated for yourself over the last 30 minutes goes, really?
Why didn't you do this right the first time? All right. One benefit of the 529 is I can take up to $10,000 of my distribution to pay off student loans tax-free. It's a qualified distribution. Can't do that on the cover bill. Okay. That's still basically saying that they expanded this to cover some apprenticeships back in 2020. Which, okay, that's fine, because think about it. I mean, you think about some of the labor programs out there. To be an electrician, to be a plumber, to do it right, if you're going to get the right certification, you have to be an apprentice.
You almost have to
That ain't cheap, because you ain't getting paid,
Yeah, you
for the most part. Maybe not at market rates, but
Yeah, I mean, you're a glorified laborer, but I mean, for like what you're talking, the apprenticeship programs,
Yeah.
a lot of your trades where you're actually licensed, the apprentice, the apprentice electrician,
yeah.
the apprentice plumber, that's an actual state license.
Mhm.
And then after so many hours working as that, then you go and apply for your journeyman.
Yeah. So, if I'm in an apprentice program, then I have expenses that I can use and take a qualified distribution.
What if I was a law student and I was in an internship clerking for a judge where I'm not technically getting paid because it's an internship required for my degree? Would I be able to use?
For room and board expenses, yes.
Okay.
Because that's consistent. That's a consistent rule across all these. Is that it's not necessarily limited to just tuition and fees. I can also take related expenses into regards to, in this case, I'm racking up these expenses because basically to qualify for my job that I'm trying to get the degree for or the certificate of, I have to do this all for free, which comes at a cost of me not being able to get a job. So this is your fallback position.
Okay.
An individual may receive one or more of the various types of education accessible educational assistance when studying in the States. These are fellowship, need-based, such as Pell to qualified tuition grants. Many of these are tax-free. You don't pay.
What's a fellowship?
It's something that's a little bit more along the lines that I might have a bachelor's in something, and I'm really going on to try and get my master's, my doctorate. But in the meantime, I'm getting this fellowship participation grant to work with this professor in the field that I'm studying in, that type of thing.
Archaeology would be a good one to use as an example. If
You're
you're
a,
out in the field working as an archaeologist with somebody else.
or you're a PA wanting to specialize in endocrinology diseases, diabetes, and you're working with an actual MD, PhD in that field.
So it's still like just an internship, different type of thing?
Well, I mean, if you were getting paid, if you were getting paid through a fellowship grant, working with that doctor or with that archaeologist or whatever, and that's how you were getting paid.
Yeah.
That's where that fellowship.
To
money would
take
come
it to maybe a different example. This one just kind of occurred to me. But did you watch Big Bang Theory?
Yeah.
All right. Remember when Sheldon wanted to switch from string theory to
in. Dark matter.
dark matter? and the university wouldn't let him do it because the grant that he was hired under,
Didn't
fellowship,
support the other.
was for string theory. For him to switch to dark matter, he had to actually become a professor.
Come on over.
So that's what you're talking about. That's what actually happened. There it is in fictionality realism.
All right.
That help?
Yes.
All right. These can be tax-free, providing that I'm trying to advance my degree. Now, Sheldon can. He's got a doctorate. So that's his income. And that's what he's paying tax on. But, say, like, if you think back to when he had that assistant for a while, she might have been
Being paid under that fellowship grant.
paid under a fellowship grant. Her income would be tax-free, whether or not she was actually actively taking school or not. The fact is that she's participating in this program is school enough. She's getting credit for it, but she might be using these expenses to pay for her board and other things.
She's got a bachelor's degree. She's pursuing her PhD, but she's a teaching assistant.
Yeah. Do we know what eligible education expense? Do we know what qualified education
No,
expenses?
no, I have to take that today.
We know that some amounts may be taxable, whether by choice or technically sometimes, like in that other case where we're talking about the assistant, if she's not enrolled in classes or using these as credit, then she has to pay tax on the grant. Like Sheldon.
Just set that there.
He's
I'll
on
be
a
right back.
grant, but since he's not pursuing anything except knowledge, he has to pay tax on it.
Yeah.
This is the best I've ever covered this section, just because I watch Big Bang Theory so much now that it just comes to you. Before, if I could think of something from MASH, I could put it in there, but it
Yeah.
doesn't really apply.
No.
It doesn't help me.
MASH would be more medical though, and
And you have medical fellowships.
Yeah,
I mean,
you
If you watch Grey's Anatomy, yeah.
if you were a
it's like
doctor,
what
Oh,
the
did he tell you
strikers
well,
used to be.
no. So if you think about it,
No, no.
if you were a doctoral candidate at Princeton, working with a doctor on a virology experiment, being paid through the fellowship, you're in school, you're still working towards your degree, but you're being paid through the fellowship that is paying for all of the expenses that the doctor you're working under is using to pay for his research. Okay? So your doctor's trying to cure cancer, you're helping him, you're being paid through the same fellowship grant that he's being paid for to fund his research.
So you're basically both.
So because you're in school still pursuing your degree, working with this doctor, your money from the fellowship grant is not taxable. Because he applied for the grant and got the grant so he could further his research, that entire grant is taxable to him. Now, because he's using that money to further his research, he has expenses and deductions, but the full amount of that grant
Alright, we're gonna do some
is
signatures
taxable to
on the
him. So if it's a $2 million grant, he's got $2 million of income.
I will print
I
off
better pick
everything for
quarterlies.
you and we'll-
If he's paying you $50,000 out of that grant as his research assistant while you work on your degree, that $50,000 of fellowship grant money is not taxable to you.
So that would be like a total disbursement to that person, but it only pays out as.
I mean, yeah, if he paid it out every quarter or what, gave you 15 grand every quarter or whatever, the money that you would receive from the fellowship wouldn't be taxable income to you because you're working for the person who is receiving the grant. Your
Okay,
income
go ahead and sign on this for me.
is an expense to the doctor who applied for the
You won't
grant,
be able to see it, but I
for
can.
the fellowship grant.
All right. So if the scholarship or fellowship is actually taxable income, you need Schedule 1, Line 8R.
Yeah.
Hang on to it. Hang on
You'll
to it.
never be asked about this ever again.
Scholarship and fellowship,
And
and
again?
it's not recorded on Form W. Is what that one says.
we really don't have research universities in this area.
No,
If I was at Lawrence with KU,
it'd be different.
it'd be different.
Here in New York, where you'd
I
have,
thought KU Med, that doesn't count.
That's
I don't know that they do any research
I don't
there.
know.
They do.
Yeah.
Do-
So I don't know.
Yeah, they have
Oh,
specialty
oh,
doctors or whatever.
But those are specialty doctors. The research is going on
That's
up
all
in
right, I'll just
Lawrence
make
for
a
the
copy.
most part.
Is- I know they
Yeah,
use.
or on Rainbow Drive in
Alright.
Kansas City.
I'm gonna get a packet put together for you, I'm gonna get this into the IRS. And I'll have vouchers for you. and everything.
Fulbright
So
grants
give me
are
just a little
are
bit to put it
treated
together,
as scholarship,
and then we'll get you out
Grant
of here.
tax free. Pell grants are tax free. Payment to Service Academy cadets and appointment to the United States Military Academy is not a scholarship or a fellowship. Payment received as a cadet or a midshipman at the Armed Service Academy is pay. They get a W-2.
Because at that point, you're almost considered
Enlisted.
enlisted or.
You're in the military.
Yeah, you're in the military.
Veterans benefits are tax free. Qualified tuition reduction programs can be tax free. IRA distributions are exempt from the 10% excise tax for early distributions, but are still taxable as regular income. Take out of an education savings program, if you do it right, tax free. And I'm not worried about due diligence.
And that's it.
And that's it. So the lecture that they said takes an hour and a half took,
Hour and 45 minutes.
yeah, right.
2 hours and 45 minutes?
Well, we had some